So good evening, students. Good evening to all of you. So students, now today's session, what we will do, now going forward, students, we will have to maintain some integrated approach. Now what we are going to do, students, is this that we'll do the other big provision, like certain couple of big provisions of the remaining area of PGBP. That is the major particular thing. Like remember the 35 scientific research deductions, 35 AD and all. So those things we are going to consider it. And then thereafter, students, once those are being done, we will complete the entire PGBP, barring few particular provisions like general deductions, like presumptive income. Why I told you already, I will be doing now, students, the practicals particular part also in an integrated manner. So therefore, these small provision or the presumptive provisions and all, now we will try to use those provisions are quite simple. Perfect, rather. Okay. That are definitely the inconsistent part. So that students, I should be, in fact, what we will do then, all these presumptive provisions, we will then use it in a practical particular way. So what we will do primarily would be that these small deductions, like 37, there is one more, 34 now. Earlier it was 37 general deduction, now it is 34. Similarly, couple of more small deductions that being covered, then presumptive income that being covered. That is something we'll do it in a practical question, students, so that you understand the implication of it, and then we'll move on accordingly. And not only that, students, I told you already. Now the capital gains, as it will start, we will try to then also use certain provisions of capital gains and try to reconstruct a PGBP and capital gains questions together. Because see, ultimately your objective would be computation of the total income. And when you have to compute the total income, students, at that particular point of time, you also realize this particular fact that when you have to compute the total income, students, you also realize this very important point that you need to integrate the other heads of income also. So instead of doing the things in isolation, we will try to integrate the heads of income and then try to achieve our final goal, which is the full-fledged computation of the total income. That is the biggest particular point as far as your the one of the biggest particular aspect of your income tax law is the computation of total income, because that is the only biggest process. Five heads, then set off, then chapter 8, which earlier it was chapter 6A. Then you to have your total income. And if you are in the alternate tax regime, then certain deductions has to go. Today's class, students, that we are going to discuss big deductions primarily in this case, which is in section number 45 and all, which earlier it was 35 AD, if you can recall that. Those deductions, students, you may be aware that if there was an alternate tax regime or there was a default tax regime, in that particular case, these deductions were not available. I think that much every one of you are aware of it. So that is one thing that we are going to target in the today's sessions. And towards the end, primary students, we will be introducing the capital gains charging section also. The first section, the charging section on that note. So shall we start, students? Just confirm. All set? Perfect. Radha, Kaniya, Muskan. Okay, students. So now, students, let's start. Students, before now, as I told you, first we will do that foreign exchange fluctuation. Kaniya. Foreign exchange fluctuation, that's the only technical ICDS which is now left. All the other ICDS, students, did you revise the last session, students, the actual cost? See through the actual cost concept, how many ICDS is over in the last session that we discussed? The only particular ICDS which I told you that we will do it in a fresh session, which is your foreign exchange fluctuation, which is ICDS 6. Let's do that, students, because in this case, before that, I will again remind you the same principle which we discussed in our first class of PGBP, where I told you ICDS 1. Students, now if you can recall that, ICDS 1 specifically says what it says, that two particular concept. One is that of the prudence and second one is that of the materiality. Those concept of prudence and those concept of materiality will not be applicable in computing the profit under the head PGBP and the income under the head other sources. That I told you already in the first class of the PGBP, isn't it? Unless what? Now they are creating an exception. Unless there is any specific ICDS which allows that concept of prudence, or if there is any specific provision under the head PGBP which allows that concept of prudence. So if there are any specific provision, we don't mind, then that provision will have a overriding effect over ICDS 1. Or if there is any specific ICDS, even that will have the overriding effect of the ICDS 1. That much every one of you are sorted, students, isn't it? Now, I told you, therefore, if you can recall that mark to market concept. What is this mark to market? Accrual of the future losses, recognition of the future losses. So this mark to market concept, wherein you recognize the future loss, those particular principle will not be recognized. The mark to market concept, unless there is any specific ICDS to that effect. In fact, ICDS 10, if you recall, students, ICDS 10 I taught you in that session itself. It told you, ICDS 10, what did it told you? That we will allow the provision for future losses. We will allow you the provision for future expenditure provided in the current tax year itself. The provision for future losses or future expenditure that will be allowed in the current tax year itself, provided you satisfy two conditions. And which are those two conditions, students? Exactly. Those two conditions are that there is a, now at least tell me, students, now at least let me see those, you all can recall the first class or not of PGP. Please, all of you have to give me that now this thing. Quickly. I'll start sharing the slide. Radha? Perfect. Very good. All the students need an answer. Kanaya? There must be, Kanaya, reasonable certainty. Please don't take this word casually, reasonable. Okay, because there, if you say certainty, it means 100%. There can never be 100% certainty, isn't it? So therefore, there should be a reasonable certainty that the expenditure or losses will be incurred, and it is capable of being ascertained, or it is capable of being measured. Clear? Use the word very carefully. Reasonable certainty. With that, students, now let's, in this case, come back. Students, I will now introduce, just confirm, Kariya, Radha, did you all got this particular PDF? If not, then tomorrow, positively, you should be getting it. This actual cost and this one. Just confirm me once. All the students who are taking up, okay, you all got it, students? Perfect. All the students who are taking up the online session right now, one request that if you all want the notes, in fact, you need to log in through the portal of the LBC. Through all the notes of every class has been kept, given through the portal itself, students. Fine. Let's, students, take across this particular thing now. So I'm now, students, coming to our ICDS 6, which is okay. I'll request them to push it. Don't worry, Radha. So, students, now coming to ICDS 6. ICDS 6, foreign exchange fluctuation, students. ICDS 6, foreign exchange fluctuation. We will read students the provision also so that at least you should also understand certain provisions. We will read it together, students. And then once after reading some particular part, then I will then give you students the examples and all. Okay, let's try to put it across. Students, over here, if you see there are two sections first before we move to ICDS number 6. Students, as you can tell me, and I think this question I already asked you earlier. If not, then at least again better to reconfirm. Students, supposingly, if there is any conflict between the section or the ICDS, I think earlier I have asked you this question, and then if there is any conflict between a section and what is given in the ICDS, then the provision of the section will prevail over the provision of the ICDS. Isn't it? That is what I think was being discussed earlier also. So just keep that in mind, students. And therefore, in the case of the foreign exchange fluctuation, therefore, students, there are two sections which are being given to you, which is section number 42 and section number 43. Earlier also it was there primarily in the form of 43A, 43AA. I don't know whether you may be aware of it, but it is section 42 and 43. These are two sections. Let's have a look. The two sections and one ICDS are relevant for treatment of foreign exchange fluctuation. Section 42 deals with the exchange difference, which is adjusted against the asset. 42, foreign exchange fluctuation adjusted against the asset, students. Whereas 43 deals with every other exchange difference and refers to ICDS 6 for its computation. Got it, students? So therefore, can we say 42, any foreign exchange fluctuation, whatever will happen, if you are in section 42, then the difference would be capitalized. Can we say that? Then the difference would be capitalized. Meaning thereby, in the block, you will have to do add or less as the case may be. The difference would be capitalized. Whereas if it is 43, if you are working in 43, then in that case, as per ICDS 6, you will do the computation. Now, friends, this comes and recall the larger principle which I taught you in the when we were discussing the block method. And again, this will reconfirm that important principle I told you earlier also, that the asset enters into the block at the actual cost. The asset, students, they enter into the block at actual cost. And the fact that the asset enters into the block at the actual cost, students, the fact that the asset enters into the block at the actual cost, what happens in that context? Indeed, students, I told you that there cannot be any room of revaluation of the asset. There cannot be any room for revaluation of the asset primarily. So you just can't do any value. You cannot try to increase or decrease thereafter once the asset is a part of the block. But if there are any statutory provision where the adjustments are being made to the WDV value of the block, then in that particular context, the adjustments needs to be done. And one of the adjustment, students, that you will do on the WDV value of the block is under section 42. Is under section 42, students. So let's start hitting section 42 for students, because 42 is something is connected to our block. And that is what first needs to be considered, because first and foremost, students, ICDS 6 is secondary. First and foremost, you need to decide whether the foreign exchange fluctuation difference, is it covered under section 42? If you say yes, then it goes to capitalizing the block. It will go to capitalizing the block. If you say that no, it is not covered, then only then you go to section 43, and 43 read with schedule number 6. Sorry, ICDS 6. Students, let's have a look to 42. Capitalizing the impact. Page number of the module is given. Let's have a look. Students, when the foreign exchange fluctuation, students, happen, the trigger would be at the time of making the payment during the tax year. In this case, making the payment during the tax year. Just ask, before I go to the impact, just have a look. In this case, ask this question. This is an important one, students. Ask this question, which is the question for 42 and 43. This question: is there a variation in the liability expressed in Indian currency in relation to an asset acquired for the purpose of a business from a country outside India due to change in rate of exchange arising at the time of making the payment during the tax year? Students, say for example, now just pay attention, students, over here. This is a case where, students, this is a case where I have purchased a foreign asset. Okay. And if there is an exchange rate fluctuation, what does it mean? It means there is a corresponding, students, it means there is a corresponding foreign exchange exposure which I have got because of this particular asset. And how did I got this exposure, students? Say for example, I have taken a loan. Students, pay attention. I may have taken the loan to purchase this foreign currency asset. And this loan is also taken, students, in foreign currency. So what has happened now? I have taken a foreign currency loan to purchase what? A foreign asset. Take the foreign currency loan to purchase a foreign asset. So I paid the vendor foreign currency, I got the asset. But now what is the situation? In this case, there is what, students? There is a outstanding loan which is there, and that loan is in foreign currency, isn't it? Now the asset, when I have purchased, I have put to use. So the asset enters into the block at that point of time. So asset has entered into the block at the spot rate. Spot rate means the rate prevailing at the time of purchase. So the asset has entered in the block at the spot rate. Against the asset, I have taken a foreign currency loan, and that foreign currency loan is yet to be paid. Now, what happens, students, in this case? What happens in this particular case, students? The exchange rate fluctuation begins. The exchange rate fluctuation begins of that outstanding loan. So what happens now? Pay attention, students. Supposingly the loan remain outstanding. Now please pay attention. Supposingly the loan remain outstanding. I didn't make the payment. So by 31st of March, that is financial year ending, there will be exchange rate fluctuation that take place. Question therefore is, do I recognize that exchange rate fluctuation? 42 says no. What 42 says? You will not recognize at this point of time any exchange rate fluctuation. Fine. Say next year I make the payment to the vendor. Now I have a spot rate and I have got a settlement rate. I have a spot rate, the original rate at which the asset entered into the block, and the settlement rate in this context. Now there's a difference in the exchange rate fluctuation between the two dates. So now that particular difference in the exchange fluctuation, foreign exchange fluctuation, that difference, am I supposed to do a recognition? Am I supposed to do a recognition? Answer is yes. 42 says that this is the year of recognition. 42 says what? This is the year of recognition. So the year of recognition is the year of payment of foreign currency loan. Point number two, how to recognize? When to recognize? I gave you the answer. When to recognize? I gave you the answer. So what is the answer? When to recognize will be the year in which the foreign currency loan has been paid. Now, what is the second question? How to recognize? Should I take the difference towards the deduction, or should I go for the capitalization? It is, students, the capitalization. So can you just try to take a note of it, students? In this case, a simpler note. Section 42. Say an example. In this case, foreign asset purchased. Foreign asset purchase at dollar 1 lakh. Fine. Spot rate was dollar 100. Was dollar 100, students. So now This is the case. 31st March, say 2026. So this is, I can give the date. Date was say 1st of February 2026. Now 31st March 2026, students, the exchange rate, $1 equal to rupees 110. 31st March 2026, $1 equal to 110. Now what has happened, students, is that on 1st of April, or maybe on 1st of June 2026. Just a second. Let me test you one more thing. On 1st of December 2026, can you just write here in the bracket, students, just write equivalent loan taken, equivalent forex loan taken. I'm just writing here, students. I have just written against foreign asset purchased equivalent forex loan. Equivalent forex loan. Now, friends, over here, rate of depreciation say 15%. Rate of depreciation 15%. Rate of depreciation, students, 15% of that asset. Okay. Then 31st March 2026, exchange rate was $1 equal to 110. And finally, on 1st of February 2026, oh sorry, 1st of December 2026, the forex loan repaid. At that time, $1 was equal to rupees 120. And you are told to calculate depreciation for tax year 2026 27. And you are also told to ignore the students, you are also told to ignore the additional depreciation concept. Okay, in this question, just ignore additional depreciation. I just don't want to add further nuances in this. I just want your focus for the treatment of the same. Students, all of you, get me the answer. All of you solve it, students, quickly. Please tell me, students. What is the answer? For tax year 26-27, rather. You're talking about tax year 26-27? By the way, the asset was put to use. If your question is, sir, when the asset was put to use, it was put to use on the same date, say February 2026. If your question is, sir, what is the date when the asset was put to use? February 2026. Okay, but my question is to calculate the depreciation for the tax year 26-27. So these are the way, students, you get the adjustments in the questions in the exam. Okay, so you have to be careful about that. Now, therefore, students, let's see. Let's work it out together, students. Okay, continue. Perfect. I myself have to see. You have the calci ready, students, primarily in this case, and then let's try to solve this particular part. So here, students, at what value it enters into the block? So the value at which it will enter into the block, students, as you know, in this particular context, it is at rupees 100, a dollar 100. So therefore, asset, considering that this is the only particular asset in the block, obviously, when no other information is given, this is the only asset in the block, is what you need to assume, maybe. So therefore, on 1st of February 2026, in this case, additions at actual cost, isn't it? So 1 lakh dollar into 100, so 100 lakhs. Fine. Now, on 31st of March, there is a fluctuation which is reported year end, but whether you are going to do the recognition of that exchange fluctuation, answer is no. Section 42 tells you when to recognize. The recognition will be done, students, in the year of payment. So accordingly, when to recognize in the year of payment and how to recognize, will you claim the deduction of the exchange rate fluctuation? Answer is no, because this foreign exchange loan was taken for purchase of the foreign exchange asset. Sometimes you may be asked a question which is a bit hypothetical, but still, be that as it may, there could be a foreign exchange loan that may be taken to purchase a local asset. There may be a foreign exchange loan that may have been taken to purchase a local asset. If that is precisely the question, students, then whether you are going to say 42 is applicable, answer is no. To apply 42, you require the condition that there has to be a foreign exchange asset, and against that, there has to be a foreign currency exposure. The currency exposure generally is when you take a corresponding loan. Which loan? A foreign currency loan you may have taken to purchase that foreign asset. You have paid off the vendor, but what remains after paying off the vendor? What remains, students, is the foreign currency loan. What remains is the foreign currency loan. And that foreign currency loan, students, now you are supposed to make the payment. Okay. And only when you make the payment that the recognition will start. So recognition will start on, in this example, on 1st of December 2026. Sorry, this is the original date. Then you would have taken the depreciation on 31st March 2026. You would have taken the depreciation at the rate of 15%. So 15 lakhs depreciation already claimed. And now in that case, it's 85 lakhs is the opening WDV on 1st of April 2026, isn't it? Opening WDV. And then thereafter, students, then thereafter, in this case, you have on 1st of December, you are repaying the loan. On 1st of December 2026, loan repaid. And once you repay your loan has been repaid, students. And once you repay the loan, accordingly, students, accordingly what? Once you would have repaid the loan, students, in that particular context, what exactly were you going to say? Indeed, students. Once the loan has been repaid, tell me the exchange fluctuation. So 1 lakh dollar you have paid. What is the extra dollar that you have to pay over and above 100? That is dollar 20. Dollar 20. Extra dollar that you have to pay over and above 100, it is 20. So therefore now how much would be capitalized? 20 lakhs would be capitalized. And after capitalizing it, how much is the value, students, after this? 105 lakhs. This is a WDV before depreciation. WDV before depreciation in this context. And after that, student, after that, friends, we will now give the 31st March 2026, the depreciation for tax year, depreciation for tax year 26-27. Sorry, this is 2027. So, students, it would be 105 lakhs into 15%. Can you just give me the answer, students, of this? Just give me the answer. I'm not You may calculate 105 lakhs into 15%. Can you just give me the answer? In this case, what is the answer? 15 lakh 75,000, isn't it? 15 lakh 75,000. Deliberately, this is the reason why, rather, deliberately, I changed the date. You people should have noticed it. And the depreciation amount, I think it is 105 lakhs, 15% is 15 lakhs 75,000. The natural query that is coming to the students is this that, sir, but since you have capitalized on December 2026, why is it that, which is of rupees 20 lakhs, then why you who have taken on that 20 lakhs full depreciation of 15%, you should have taken a half depreciation, which is at 7.5% on that 20 lakhs. And on the opening WDV, you take full 15% rate of depreciation. This is the majority of the query. That was the reason why this particular question I deliberately changed the date. Now, students, pay attention to all. Just you have to pay attention now. This one, students. This means that this particular concept needs to be drilled down very clearly. The 50%. Pay attention. I will make you write a note. But at least I hope that all of you have written. I will make you write the note. Don't worry. The concept also and the confusion also. That's the reason why I gave you this question. Students, that 50% of the normal rate of depreciation is applicable only in the case of what? The 50% of the normal rate of depreciation, students, is applicable only in the case when the two conditions are satisfied. Again, I'm repeating. The 50% of the normal rate of depreciation is applicable only when two conditions are satisfied. And what are those two conditions? Condition number one is that the asset must have been acquired during the previous year, so during the tax year. The asset must have been acquired during the tax year. And second condition, it is put to use in the same tax year. It is put to use in the same tax year, students. If that be the case, students, just a second, we have goofed up here. In the previous particular scenario, you people have said this one. Student, this is not this one. This is 7.5%. Why you have taken 15% students on this one? This has to be 7.5% because the additions have been made on 1st of April. So just pay attention now. So this precisely, student, this is what needs to be changed. The 50% of the normal rate of the 50% of the normal rate of depreciation is applicable when the two conditions are satisfied. Which are those two conditions? Condition number one is that the asset has been purchased during the tax year and it is put to use for less than 180 days during the tax year. So tell me, it was purchased on 1st of February 2026 and is it put to use for less than 180 days? For the same tax year 25-26? Answer is yes. So instead of this, students, the first error is 7.5%. So this also needs to rectification. The first calculation itself requires rectification, the first year. So this becomes 7.5%, students. The first calculation itself requires a rectification print. Therefore, just be careful of this 50% print. This might trouble you. You may end up doing these sort of a silly mistakes that we are doing it right now. So just be careful on avoiding these sort of a silly mistakes in this context, and therefore, friends, this is 7.5%, and which means that this will be 7.5 lakhs. 26 for the previous year, 25-26. The tax year 25-26. Let's not use the word previous year, tax year 25-26. Okay, it is 7.5 lakhs. So now in that situation, students, what is the scenario over here? Over here, if you see, students, in this context, it is 92.5 lakhs. Opening WDV. Now, again, the second question comes. And what is that? Sir, what about this 20 lakhs? I'm coming to this one. Now, therefore, your closing WDV before depreciation is not 105. Your closing WDV before depreciation, students, is how much in this case? 112.5 lakhs. 112.5 lakhs. 112.5 lakh students. This is the WDV before the depreciation. Once that has been known in this context, students, then the next thing comes. And what is that in this regard? Now comes the 31st March 2027 depreciation. Now, many students say that, sir, for 92.5 lakhs, which is the opening WDV, you give the full 15% depreciation effect. And for the additions in the form of capitalization that you have done, this loan has been repaid. So the effect which you have given in the section 42, this section 42, of that 20 lakhs, you give 7.5%. No, students, for the entire 112.5 lakhs, you are going to give a full depreciation at 15%. A full depreciation at 15%. And why is it so? Again, I'm repeating the same condition. And what is that condition? That 50%, half of the normal rate of depreciation, half of the normal rate of depreciation is applicable when the two conditions are satisfied. And which are those two conditions? The asset must have been purchased during the year and it is put to use in the same year for less than 180 days. It is put to use for the same particular year for less than 180 days. Tell me one thing, when you are doing this capitalization of 1st of December 2026, are these two conditions are satisfied, which makes you to take only half of the normal rate? Those two conditions are not satisfied, and because those two conditions are not satisfied, you will go with the normal rate of depreciation. The normal rate of depreciation, students. I hope that all of you are clear with this one. So now in that case, on 112, you will, on entire 112.5 lakhs, you will claim 15% rate of depreciation. This is the common mistake, students, that the students does. And this is where we need to be quite careful about it. Is that point clear to all of you? Just I'll give you the note quickly, students. I'll give you the note quickly in this context. So the depreciation now is how much, students? 16 lakh 87,500, right? The depreciation for tax year 26-27 is 16 lakhs 87,500. Please take a note quickly, students, now. Below that. Write a note. Under section 42, quickly, students, under section 42, where an asset has been acquired, from a foreign country against which there is a foreign currency exposure, in the bracket you'll write, for example, For example, foreign currency loan has been taken. Foreign currency loan has been taken to purchase to purchase such asset, bracket complete, bracket complete, then then the exchange rate fluctuation, then a subsequent exchange rate fluctuation, a subsequent subsequent exchange rate fluctuation shall be recognized as under. Subsequent exchange rate fluctuation shall be recognized as under. Point number one. Point number one. It shall be recognized in the tax year. It shall be recognized in the tax year when the payment is made. When the payment is made either in full or in parts. Either in full or in parts. Point number two. The exchange rate fluctuation at the time of payment. The exchange rate fluctuation at the time of payment the exchange rate fluctuation at the time of payment shall be capitalized. Shall be capitalized. Full stop. Next line, right? Therefore, under section 42, the recognition of exchange rate fluctuation, the recognition of the exchange rate fluctuation shall not be made as per the MTM full form, mark to market. Why? Right, students, one more note. Another note. The 50% of the normal rate of depreciation, the 50% of the normal rate of depreciation is applicable. The 50% of the normal rate of depreciation is applicable if the following two conditions are satisfied. If the following two conditions are satisfied. Point number one. The asset is purchased during the tax year. The asset is purchased during the tax year. And point number two. Point number two. It is put to use. It is put to use in the same tax year. It is put to use in the same tax year. Fine, students? I hope that all of you are clear with this one. Now, students, supposingly, in the same question, if you would have paid 50%, students, instead of paying only 50, he would have paid only 50%. Now you tell me, now the provision is there in front of you. He has purchased, students, only 50% of the liability. Now you tell me what would have happened if he would have purchased only 50% of the liability in this particular case. 50% liability he has paid on 1st December 2026, and another 50% he has paid. The balance 50% he has paid on 1st December 2027, when the exchange rate fluctuation was 140. When the exchange rate fluctuation was 140, then students, what would have been your answer? Then your answer, students, in this case would be this: if you have paid in part, to the extent that you have paid, that much of the exchange rate fluctuation will be recognized. And accordingly, students, over here, on 1st of December 2026, that extra 20, you will always compare from the spot rate, that extra 20 into 50,000, that balance portion. So that will give you, in this case, that will give you, students, in this case, 10 lakhs. 10 lakhs. And now when you go to the next year, it has become 140. So 100, students, the spot rate was 100. And the next year's payment date, the rate was 140. Difference now is 40. How much dollar has to be paid? 50,000. 50,000 into 40. That is what would be 20 lakhs. Would be added on 1st of December 2027. I hope that every one of you are now clear with this one. If that is the case, students, shall we proceed now on section 43 and ICDS number 6? Quickly confirm on the practical application. Depreciation would always be 15% now. 140, when I said 140, when the next year, when you are paid on 1st of December 2027, it was what rate? 140 was the rate. So what I told you, spot rate 100 and the balance payment date, what is the rate? 140. Difference is how much? 40. How much dollar has to be paid? $50,000. So $50,000 into difference of 40. How much additions you're going to do? Capitalization that you're going to do? You will do the capitalization of 20 lakhs. So students, now just pay attention to just again summarizing this entire thing. When section 42 is applicable, be very careful. The first and the foremost requirement is that there has to be a foreign exchange asset that you should have purchased. And against that foreign exchange asset, there is a corresponding foreign currency exposure. And the example I have given you was what? I have taken a corresponding foreign exchange loan to get this foreign exchange asset. Sorry, the asset from the foreign country. Okay. So once that is done, your asset enters into the block. When the asset is put to use, it enters into your block. Okay. That is it. After that, 31st of March, there is a corresponding foreign currency exposure, which is already there now in the form of forex loan for this asset. Now, what exactly the section says? The section number 42 says that please don't do any mark to market recognition of forex loss. Please don't do any mark to market recognition of this forex loss. This recognition will be done only when you make the actual payment of the forex loan. Whether you make the payment in part or in full, but only when you make the payment, at that time only you will compare the spot rate and the payment date rate. Spot rate and the payment date rate. And that difference is what will be capitalized. When it will be capitalized? On the date of payment. On the date of payment करेंगे. So therefore, in this example that we did, full payment was made on 1st December 2026. So what I did, 120 and 100, difference is 20. Okay, that is the $20 extra I have to pay against $1 lakh. $1 lakh plus 20 extra. Now I have to make the payment in this case at the time of paying the loan. So therefore, this extra, which is 20 lakhs in this question, this extra, which is 20 lakhs in this particular question, I have capitalized at the date of payment. Which is the date of payment? 1st December 2026. Okay, and then accordingly on 31st of March, I'll claim a depreciation. Depreciation, I don't think now any issues are there. 15% on the entire amount. Is that point clear to all of you? So it is a date, therefore, two things. When to recognize the exchange rate fluctuation in this case. When to recognize is the year in which the payment is made. Always remember 42, foreign asset purchased against which there is a foreign currency exposure. In such case, remember the exchange rate fluctuation will be recognized in the year in which the payment of that particular loan has been made. And how it will be recognized? By capitalization of the amount. By capitalization of the amount. Is that clear to you? Any particular query now you have, students, just take care of this mic. Please ask me. That will be much better. Through the voice chat, you can always come in. Radha, Kanaya, Muskan. Clear? Shall we move now to 43? Okay, perfect. Let's start now, students, further. Now we go, students, to section 43. Now, if it is not a 42 case, students, if it is not a 42 case, then section 43 comes into picture. That is what we have said now. If it is not a 42 case, so how do we know in the question it is a 42 case? Simple. Is it a foreign asset? And is there a corresponding against this foreign asset? Do we have any corresponding foreign currency exposure? Foreign currency liability exposure. So how do we recognize section 42? Simple word. Read the question. Just check. Do we have acquired any foreign asset? And against which do we have any foreign currency liability exposure? If these two are there, then it is section 42. So far as the recognition of exchange rate fluctuation that will arise on that liability. On that liability. If these two conditions are not satisfied, meaning thereby, I gave the example, students. Say for example, I purchase a raw material from foreign country. Students, I purchase a raw material from foreign country by taking a foreign currency loan. Raw material has been purchased by taking a foreign currency loan. Whether section 42 will it be applicable? Answer is no. So where it will go? It will go in section 43. Along with that, ICDS number 6. Along with that, ICDS number 6. I hope that every one of you are clear with this one. So first, always check for applicability of section 42. If not, then it is 43. See section 43, students, what it says. In this case, subject to 42. So check first, always 42. Any gain or loss arising on account of any change in the foreign exchange rates or foreign currency transaction shall be treated as, can you see that, students? Shall be treated as income or loss, as the case may be, computed as per ICDS number 6. Income or loss, as the case may be, computed as per ICDS number 6 in this case. Now that exactly is what it is in this regard, students. Now if you see ICDS number, so always bear it in mind, students. Again, I am repeating, always bear it in mind whether 42 is applicable or not. Always see that. That's the reason why I give you the examples also. If 42 is applicable, you don't have any confusion. Primarily capitalize that exchange fluctuation, and when you will capitalize in the year in which you will make the payment, whether the payment is made in full or in parts. But if at all 42 conditions are not seen, 42 situations are not seen, then it is 43, and 43 gives you the entry where in your profit and loss account. Because the recognition, how to recognize? The recognition will be in the income or loss, that is the P&L account, and that will be as per ICDS 6. So I now got the mandate to enter into ICDS 6, students. I now got the mandate to enter into ICDS 6. This is what ICDS 6 is all about. So there is a mandate to enter ICDS 6 when 43 is triggered. And now have a look, students, ICDS 6, what it says. Monetary item, non-monetary items. Non-monetary item being so students over here, what is non-monetary item, students? Monetary item means there is either receivable or payable. Students, either there is a receivable or payable, like debtors you are supposed to receive, that debtor is in foreign currency. So say for example, you have sold some goods outside India. So for that there is a corresponding debtors. For that, students, there is a corresponding debtors. And that corresponding debtor, students, is in foreign currency because obviously the invoice was issued in foreign currency. That is how it is. Or creditors, I have purchased a raw material. I have purchased a raw material. Raw material was purchased in foreign country from the vendor, and the invoice was made in foreign currency. The amount is yet to be paid. I'm just giving an example. These are the example of monetary items. Or loan. Or loan. I may have given the loan or I may have taken the loan. And these loans are being taken in foreign currency. But be careful, students. These loans or these monetary items are not in relation to foreign assets. Because if you say that, sir, these loans, foreign currency loans, primarily are in respect of the foreign asset, then where you go? You go to section 42. So maybe I can say this is like a general loan or loan taken for, say, inventory. So I have a foreign currency loan exposure primarily, and that exposure which I'm having will give rise to exchange rate fluctuation because I'm not yet made the payment to that particular lender, to the lender of that particular amount. So I will have a foreign exchange fluctuation exposure, students. Now, how I'm going to recognize? Students, how I'm going to recognize? I am going to recognize by virtue of what, students? I am going to recognize this by virtue of the section 43, which says that recognize in your P&L account, the profit and loss account in that case. And now, students, just have a look what it says. Convert into the reporting currency by applying the closing rate. Okay, so what you have to do, students, conversion as the last day of the tax year. This is what it is, students. Can you see that? Last day of the tax year means, are they telling you that in the year of payment or it is the last day of the tax year? Last day of the tax year. So what you will do in this case, closing rate and the spot rate, the closing rate and the spot rate, you are going to compare. And that, students, will be recognized. Recognize what? As an income or expenses in the tax year. As an income or expenses in the tax year. Now you tell me, students, don't you think that this is nothing but mark to market? Tell me one thing, is this MTM mark to market? Answer is yes, 31st March. Recognition is done in this context on the basis of the exchange rate which is prevailing on 31st of March. This is what is known as mark to market. And therefore, by virtue of this, students, tell me again, if 31st March is what I'm supposed to recognize, this goes against ICDS number 1, which says that mark to market will not be recognized unless there is any specific ICDS which says that MTM recognition is allowed. So which is a specific ICDS which says that the MTM should be recognized? It is ICDS number 6. But be careful, ICDS number 6 is to be considered only when section 43 is invoked and not section 42. Is that point, students, clear with all of you? Is that point clear to all of you, students? Every one of you? I hope that all of you are clear with this one. This is what students you have to just be clear about it. Only for the monetary items, only you just remember this one. The rest of it is not relevant. You will just get into this one. Just remember this particular part. Whether realized or unrealized gain or loss, which one? Realized, unrealized doesn't matter, no? Kanaya. Say for example, here 31st of March, I have not made any payment. So because I have not made any payment, just take this example. Say at the spot rate, the loan that was being taken was say of rupees 100, general loan, nothing to do with that foreign asset. Because then if it is a foreign asset, 42 will come into play. Say a general loan taken in that context. And the foreign currency loan. Now what happens in this case? 31st of March, the exchange rate is 110. Difference 10 into say $1 lakh loan has been taken. So difference 10, $1 lakh loan has been taken. How much it is? 10 lakhs. 1 lakh into 10. It will be recognized as a loss. In the same tax year, on the basis of MTM, say next year now I'm making the payment. And the payment I have made at that time it was 115. When I made the payment in the next year, it is 115. Now what happens? Now $1 lakh in this case, $1 lakh which is there, and $1 lakh in this scenario, then what is the difference now? What is the difference now? 110 would be compared now with 115. The difference is 5. And on that 5, $1 lakh will be how much? 5 lakhs. So 5 lakhs will be recognized in the next year. This is how you do under section 43, read with ICDS number 6. I hope that this particular point is well taken by all of you students. Yes, Radha, unmute. Kanaya, now
Yes,
you got
sir.
it?
Yes, sir. Am I audible?
Yeah, audible.
Sir, basically, actually, I'm combining ICDS 9 and ICDS 6 over here since you gave the example of purchase of raw material. Okay, so it comes under inventory. So, generally, I was confused, not confused actually, just asking that because it's a qualifying asset as per the ICDS 9. But here you are taking it as per the ICDS 6. Are you getting my query, sir? What are you trying to
So
ask?
you are no, rather your stretch is on the interest part. When you talk
Yeah.
borrowing cost, here I'm not talking about the interest expenditure. Here
Yes.
our focus is not on the interest particular part. Whatever was the
Yes.
interest to be capitalized, yes, we go as per ICDS 9, we go as per Challapalli, everything. That is the thing. So interest continues to go on that tangent. And mind
Yes.
you, if I have to involve the interest element over here, please be mindful of the fact that asset is already put to use. And on the which date, if you remember in my first example, the asset was already put to use on 1st of February 2026. So
Hmm.
whatever is the interest expenditure that I'm going to incur, of that interest expenditure, I'm going to claim a deduction.
Yes.
That deduction will be available to me. But the question is not on the interest particular part here. In interest part, yes, ICDS number 9 will come into picture.
Yes.
Here is on that principal amount. I have got a foreign currency exposure by say, for example, taking a foreign currency loan, which I've
Yes.
taken to purchase that asset. So
Yes.
that is the exposure I got. So yes, on the loan, whatever is the interest that I may incur, and I
Yes.
incur after the asset is put to use in my original example, in that
Hmm.
situation, I'll claim a deduction of that particular interest expenditure. That is perfectly fine. That is
Okay.
absolutely no issue. But here is about on the principal amount of $1 lakh in that context, whatever is the fluctuation that is going to take place on the principal that you have to pay,
Hmm.
that fluctuation recognition is
Hmm.
either 42 if the 42 conditions are satisfied, or it will go
Hmm.
into 43 if the 43 conditions are satisfied.
So
Right.
yes, sir. So here inventory will like inventory is a part of asset. So since you said in 42 it should be a foreign currency asset. So what comes under asset then, other than current asset?
No, the asset, foreign currency asset, I meant
Yes.
when I say
Yes.
42, that asset
Yes.
means those assets which will go into the block of asset. Because we are
Okay.
talking about the getting the asset into the block, isn't it? So
Yes, which is capitalized, that one, not
capitalized.
the
Yeah,
trading
yeah, yeah.
items.
True, true, true.
Okay, sir. That was the only thing I was linking. Thank you.
That is right. Okay, so that asset which we are talking about for 42 are those assets which was there because this actually slide, I just have taken this for granted, but I should have made it very clear at the outset. But this slide, students, just remember this slide we are doing of the actual cost. But since I took it in a different session today, so I should have clarified at the very outset, it is the actual cost slide. So it means these items that we are talking about 42 are those items which is actually getting into the block of asset. So foreign exchange as foreign asset acquired from the foreign country are those assets which will enter into the block. I hope that this is point well taken by all of you. Kanaya, if you want to also unmute the mic and ask any query, please do. Any query, student, because this is actually a very technical standard. One has to recognize this. So that's the reason why I deliberately didn't wanted to introduce the standard or the section in the middle of the previous class. I wanted to do it at the very start of the subsequent session. That is the reason why this is the only technical standard, very technical, as compared to whatever we have discussed. So that's the reason why I want that every one of you should be very clear about it. Okay. If it is needful, students, just revise. Kanaya, these particular session, you can always revise this particular session up till now. Okay. That first 1 hour is critical. Students, let's proceed now, students. In this case, ICDS 6, students, only this much is required. Monetary item, just that is it. Rest of the fluctuations which are there has got no relevance. Just keep this thing in mind. So, monetary item, I gave you the example. Say a general loan I have taken for other than that 42, other than the foreign assets which have purchased primarily, for which 42 is applicable. Just forget that. A general loan for which I need to make the repayment now, isn't it? Repayment I have not made at all. So I've not done any repayment of that loan. So what I will do in that case, ICDS 6 says, even though you don't have done the repayment, 31st March every year, you will do the recognition of whatever is the income or loss that has arisen out of the foreign currency fluctuation. So from just one particular diagram, I just want you to copy down this. This will give the effect of the section 43 and ICDS 6 together. This much will suffice, students, in this case. One particular diagram, students. Only one diagram. Students, just have a look over here. All of you. Section 43, read with ICDS 6. Give an example, student. Example, $1 lakh loan taken for raw material purchase. Transaction date, 1st February 2026. $1 equal to 100. 31st March 2026. $1 equal to 110. Then 1st June 2026. Payment of the loan amount. $1 equal to rupees 115. So students, what will happen in this case? So be careful over here. From 1st of February 26 and 31st of March 26. Then there is a 1st of June 26. So from here 100 to 110. This much of the difference of 10 into dollar 1 lakh, which is 10 lakh dollar, which is rupees 10 lakh. This is allowed as deduction, friends. This will be allowed as deduction. Which year? In tax year 25-26. And now here, so 115 was there, isn't it? This particular difference, which is 5 into how much you have paid? Full $1 lakh you have paid. So rupees 5 lakhs. So this 5 lakhs would be allowed as deduction, students. In tax year 26, 27. Fine, students. If the same question would have been of 42, the loan was taken for purchase of foreign asset. Foreign asset, students, same question of section 42. What would have been your answer? No recognition in tax year 25-26. No recognition in tax year 25-26 and full recognition in tax year 26-27. That is from 100 to 115. The difference is 15, which is rupees 15 lakhs. And how to recognize? Whether as a deduction or capitalization. Capitalization. I hope that by virtue of this now, friends, all of you are very clear of this. And this wraps up this particular concept of 42 read with section 43 and ICDS number 6. Is that clear now, every one of you? Hariya, Radha, Muskan, all of you? Perfect. So with that, friends, now let's proceed further in this context. This is no. Where ICDS 9 came here, I'm talking about the exchange rate fluctuation. That is ICDS 6, isn't it? Did I write ICDS 9? This is ICDS 6, no? Exchange fluctuation we are talking about it. Why? I'm not talking about the interest particular part. Be very clear on this part. The interest particular part on the loan. Yes, you say, sir, what about interest that I have taken? Claim the deduction. Claim the deduction in this case. No issues on that. In this, whatever is the interest particular part, keep claiming the deduction. Now you will say in this case, interest, how to claim deduction? So for that, students, please be very careful. For interest deduction, students, remember, is it allowed on payment basis? Where, from whom you have taken the loan? Maybe you would have taken the loan, the foreign currency loan, if you have taken from a bank. The foreign currency loan, students, if supposingly you would have taken from the bank, then in that case, the bank or the financial institution from whom you have taken the foreign currency loans, then the interest that arises, for that there is a section, there is no ICDS. For deduction, there is a section. Borrowing cost is about the capitalization. But for deduction, you take a section route in this case. And then, but be careful, students, the interest particular part will be allowed to you as a deduction only when you will make the payment out of it. I will make one adjustment, students, in the total income. One question, just wait for it. In this case, this question I'm going to use it primarily, this adjustment I'm going to use it. The forex loan primarily have taken, and on that I have got an interest. That interest is not paid in this regard. That interest is not paid, and primarily, what will be the treatment? So the treatment, students, primarily don't see for interest particular part. For interest particular part, don't see the treatment in ICDS number 6. Also, borrowing costs will not be applicable because may not have taken the loan for the asset, or even if I have taken the loan for the asset is already put to use. So these are the interest after the asset is put to use. So what do I do about that interest? Check that question. What is the question? From whom you have taken the loan? If you have taken the loan from the bank or you would have taken the loan from the financial institution, then allowed as deduction on payment basis. Remember that 43B old section, which we have also done in the current one. Bonus, commission, family debt taxes, dues, leave encashment, the superannuation, gratuity, the other particular funds wherein the employer makes the contribution, isn't it? Same also is for the interest particular part. So therefore, that is one thing which has been there. Let me put this adjustment in one of the question that we will be dealing with it, so that at least this can test you again where you can easily go wrong, students. Where you can easily go wrong. So students, in that scenario,
Yes, sir. Basically, that's what I was asking. That specific that deduction would be claimed under Section 43 head itself. That was my point.
yeah,
Okay.
perfect. Any questions that has been there, please let me know. Now, friends, coming on this particular part, any queries or thought process which comes to your mind, it is all okay for this thing, because this was the only technical particular point that you should be very clear about it. But as I told you again, I'm repeating this point: 42, 43, and ICDS 6. They only talk about the exchange fluctuation that take place. That is it. Okay. They are not talking in this context of the interest particular part. For interest, for capitalization, ICDS 9. Beyond that, it is the full deduction, isn't it? That is how we all know in this context. So just be very careful about certain things, students, which is there on this context. And these are the adjustments that you have to be careful. And I will, in fact, will now introduce certain important such adjustments in your questions also now. So I'll drop those questions wherein these adjustments will be an integral part of it. Now, friends, with that, we are done with this particular part, and now coming to this particular segment about the big deduction. If you see, one of the category which I have taught you of the big deduction, or I have given you in my original chart, deduction of the capital expenditures. Deduction of what, friends? Of the capital expenditure. So do we have a sections in which we get deduction of capital expenditure? I did told you earlier only that the net profit is for the PGBP and for the IFOs. The net profit is the base amount. That net profit is as per the commercial accounting principle. And as per the commercial accounting principle, whatever is the profit that you compute are non-capital item. The profit that you compute as per the commercial accounting principle does not recognize any capital item. They only recognize the trading item. They only recognize the item which you are incurring in the normal course of business. So therefore, any capital item is not recognized in my net profit, students. But what, and then on that net profit, I make the adjustments. On that net profit, I make the adjustment from section 26 till then, and then ICDS 1 to ICDS 10. These are the specific adjustments that I make. So if any specific provision or specific ICDS tells me that I shall be allowed the deduction of a capital expenditure, will I have to then take the deduction? And the answer is yes. So which are the sections under the head PGBP which grants me the deduction of capex? These are the sections now, students, that we are going to discuss. So here, students, the sections are 45 and 46. Be careful on that particular part in this case. So 45 and 46, if you see, are the section which provides you the deduction of the capital expenditure, and also 47. 45, 46 and 47. Please have a look over here, students. 45 is all about the scientific research. The 45 in this context, students, the scientific research expenditure. Old act was 35. Now it is 45. Module page number I have already given it to you. 46. Remember 35 AD, investment link deduction. Again, deduction of the capex that is allowed. In this case, again, module page number has been given, and then section 47, which was corresponding to the old 35 triple C and 3CD. I will do, students, 45 and 46. 47 I'll give you as a homework. It's a very simple one. You can take a note of the module page number 3.115. Now, students, in this case, tell me one thing. For the very obviously, even the income tax law, therefore, is creating an exception. Do you all agree? Income tax law is creating an exception whereby it is granting you the deduction of a capital expenditure. So, therefore, whether this deduction will it be unconditional or it will be condition based? Obviously, condition based. Will it be applicable to all the SSC or to a class of SSC? Only to a class of SSC. Because if this would have been for all the SSE, then the general deduction would have come into picture. But definitely, this would only be applicable to a class of the SSE, and not only that, it will have some attached conditions. What it will be? It will have some attached conditions. Do you all appreciate that? And if you can appreciate this, definitely you will know what I'm going to read over here. You will know that this is what we need to read in this context. Now, students, over here, if you see in this context, section 45. Students, section 45, let me just confirm the subsections. Section 45. So, students, section 45, if you see over here, you may take a note of it. Section 45. So, this is about the scientific research deduction. Scientific research deduction. Here, there are two subsection students, which is there. And subsection 1 and subsection 2, you have incurred scientific research expenditure. You have incurred what? Scientific research expenditure, and to incur scientific research expenditure for your business, for the business. And the second one, students, that is there, which is subsection 3, is about what? Is about the donation which is given for, scientific research purpose. The donation which is given for scientific research purpose. So 1 and 2 is incurred, the scientific research expenditure is incurred for the business. That is 1 and 2. And the third one, students, is about the donation which has been given for scientific research purpose, and that exactly is the point, students. Is that point clear to all of you? Shall we proceed now? I think you people would have done this thing in your interest here also. A little bit of it. You would have known about this, how the things work. Fine. Now, students, on that basis, let's begin with this particular thing. So obviously, students, the government encourages. This is actually an important section. Please understand, this is a very important section, specifically when you have something like Make in India program of the government. So when we have such sort of a program of Make in India, it is not only manufacture, it is also about the technology. Because it is so important that we do a research on that. And by virtue of a research primarily that you do, you create some world-class product. A world-class product primarily not only for the country, but maybe definitely you will be in a position to export it. So one of the ways of the government to encourage research is to provide the deduction route under the income tax law. And what the government has done to encourage the research, that if for your business, if you are undertaking a research, then for that research program, the deduction that you're going to claim, not only the revenue research expenditure that you will incur, but also the specified capital expenditure that you will incur, for that also we will provide you the deduction. For that also we will provide you the deduction. So this is what students 1 and 2 is all about. I give a simple example. Remember, I am aware of it. Ashok Leyland, students. Ashok Leyland, you all are aware. They are the manufacturers of this truck and all, isn't it? They did research of the chassis. I hope that you are aware of chassis, where the goods are loaded. Now, the research which they did was enabling them to increase the longevity of the life of the truck. And how that was? Because if your chassis is solid, it is in a position to absorb the load of the goods which are put in the chassis. Then if the chassis can absorb the load, what happens? Ultimately, the life of that truck or that heavy goods vehicle will increase. So they were encouraged to do that research on the chassis and all. And what has happened, students? Now we find many of these heavy goods vehicles we are exporting to many countries. And this is one of the reasons. You do the research and government will provide you the support in the form of deduction. And what is the deduction, students? The deduction is your revenue expenses full capex that you have incurred, not all the capex. The specified capex will be allowed as deduction 100%. I hope that all of you are clear with this one. Every one of you. Third is like a different story that we'll discuss it a bit later. But just focus on 1 and 2 right now. That is where you need to put your attention in. On that note, just quickly, let's have a look what this thing 1 and 2 is all about. So here, students, please be careful. A Limited, say for example, any particular company, say A Limited. A Limited would have their two divisions now. So their business division and then there is a research division. Their business division, students, and then there is a research division. So now in the business division, obviously they are computing the PGVP, computing PGVP. And whatever PGVP that they are computed from the research division, students, there is a revenue expenses. Now visualize, students, this is how the things are. Revenue expenses and specified capex. Specified capex. Not all the capex. Capex means capital expenditure. Only the specified capital expenditure. Now these two students also, will it be allowed as deduction? And the answer is yes. Deduction under section 45. And after claiming the deduction under 45, you will get what? PGVP. So this is how the deduction applies. So this is your final PGVP. So there is a PGVP before 45, and then on that PGVP, claim deduction of 45. Claim deduction of 45, and that will give you the final PGVP. That will give you, students, the final PGVP. Are you in a position to consolidate and visualize this particular thing, students? If that is the case, can we proceed further on the section itself now? Confirm this quickly, students. All of you. Just confirm. Yes, Radha. Correct. Now let's then in that case, even like for example, Tata Nano, Tata Motors, even they have in fact got this heavy deduction of section 45, students. Heavy deduction of 45. Tata Motors, they also do a lot of research. So don't think scientific research means only pharmaceutical company comes to your mind. I'm giving you automobile industries. That's a classic example that they do the research. Keep on doing the research and keep incurring expenditure. Government says that keep doing research in your research division, keep incurring expenditure. We shall grant you the deduction. We are there now. Why to worry? So that is what it is, students. Now, students, over here, just have a look to once this last particular item, students. Just have a look. This particular part. Expenditure on scientific research, drugs and pharmaceutical. So here section 45.2, somebody will say, sir, what is this 45.1 and 45.2? You have parked them together? Yes, I have parked them together, but let's 45.2 include expenditure on clinical drug trial, on obtaining approval from regulatory authority. You can just for the sake of reading, students, it is fine. It is given, since it is given in the module in page 3.96. I just thought of to tell you, just one single reading is fine. Now let's come to section 45.1 first and then 45.2. Again, I'm telling you 45.1 and 45.2 provide you the deduction of the scientific research expenditure that you have incurred in your business. Whereas 45.3 is about donation that you have given for scientific research program. Let's have a look. 45.1. revenue expenditure of the tax year, 100% of the revenue expenditure incurred on the scientific research related to the business of the SSC, 100% of the revenue expenditure that you have incurred on scientific research. Capital expenditure of the tax year, students. Capital expenditure of the tax year. Now be careful, students. Here, if you read it carefully, 100% of capital expenditure incurred on such research, but not expenditure on the acquisition of land, whether the land is acquired as such or as a part of any property. So when it comes to land, students, it will not be allowed as deduction. Primarily, other than land, like for example, I have got a scientific research building. So students, please be careful. Now don't confuse on this particular point. There is a factory building wherein I am manufacturing the goods. Perfectly fine. In that factory, I have got the plant and machinery, which enables the manufacturing process of my goods. Those factory buildings, those plants are something which enters into the block. Those buildings and those plant enters into your block. Respective block is where it will enter. And what about, students? What about this particular scientific research building or the scientific research plant? What about them? This will not enter into the block. But whenever you incur the expenditure in respect of them, whenever you incur the expenditure in respect of them, that will be allowed to you as a deduction under section 45. Under section 45. And that exactly what it is. Are you getting this particular point? Can you visualize this? How the two things are different. One is the normal commercial division, the manufacturing division that keeps taking place. The assets that you acquire, capitalize. Only the eligible capital asset that you acquire, capitalize. Take it in the block. Claim the depreciation. Here, for the scientific research division, revenue expenditure or the capex, the eligible capital expenditure, which means 45(1), it have one ineligible capital expenditure. And what is the ineligible capital expenditure? Land. So minus the land in that context, rest all the capex. When you incur, you will claim the deduction. You will claim the deduction. Shall I, students, ask you? Let me ask you this. Are you ready for the challenge, students? Up till now, have you understood it? If you have understood, then you should be ready for the challenge. Okay. Ready? Kaniya, Radha, Muskan. Okay, students. Let me ask you then. So I have deliberately kept the slide like this. Let me, no, I should be lenient enough not to torture you more. Let me put it like this. And let me ask you the question. Now be careful. All these questions, I'm going to put it in the adjustments and be ready for the questions, which will start from the next class. From the next class, almost you will find some beautiful questions now waiting for you. Apart from whatever you have done, some more questions. Let me then ask you this question, students. My business has started, business has commenced. I'm already doing the manufacturing. And now in the meantime, I thought that no, it's high time to do the research. So I'm incurring a construction of my research. I'm incurring the construction of my research division. As on 31st of March 2027, it is in the capital WIP form, meaning thereby the research building is yet to actually been put to use, meaning thereby it is not yet finalized. The research division building is yet to be constructed fully and to be put to use. Okay. My capital WIP expenditure till 31st March 2027 is say rupees 20 lakhs. Whatever is a building construction, which is still in capital WIP form as on 31st March 2027, that expenditure is rupees 20 lakhs. The PGBP before section 45 is rupees 100 lakhs. PGBP before Section 45 is rupees 100 lakhs. Whether I will be allowed the deduction of this capital WIP, or will I be allowed when the building is fully constructed and thereafter put to use? When the deduction will be given to me, whether the deduction will it be given to me in the tax year 26-27 of rupees 20 lakhs, even though the building is not yet fully ready, it is still a capital WIP. Will I be allowed the deduction in tax year 26-27 is my question to all of you. Please tell me, students, what is your particular analysis in this case? All of you should. Quickly, students, what is your take? And students, the answer is yes, it will be allowed to me as a deduction. Yes, it will be allowed to me as a deduction, but be careful. The deduction has been allowed, but the reasons are very critical. The 20 lakhs of the capital WIP on the construction of the building as on 31st March 2027 will be allowed to me in the tax year 26-27 itself. But somebody will say, sir, but the building is not yet ready. There is no put to use. Doesn't matter. It doesn't matter, students. The rule of depreciation allowance. The rule of depreciation allowance. That is the asset which is used for the purpose of business. That particular rule of depreciation allowance is different. There, the depreciation is allowed in respect of the asset which is put to use, and unless the asset is put to use, it will not form part of the block, and unless it forms part of the block, it is not eligible to claim the depreciation. That is the entire architecture of depreciation allowance. But when it comes to the deduction of capital expenditure on scientific research asset, the deduction is allowed merely on the basis of incurring the capital expenditure. A mere incurring of the expenditure will be sufficient enough. Mere incurring of the expenditure where it is written that the asset has to be, or the scientific research asset has to be put to use. Nowhere it is written. So mere incurring of the expenditure for scientific research purpose is sufficient enough for claiming the deduction. Is that clear to all of you, students? Every one of you. Now, please be careful of this 3 years reason. Don't give this 3 years reason, rather. For the reason being, business has already commenced. In my example, I told you already the business is already commenced. Therefore, I told you the PGBP before 45 deduction is 100 lakhs, which means the business is already commenced. Isn't it? That has nothing to do with that. But this scientific research expenditure building is getting constructed while the business is already commenced. This scientific research building is getting constructed, meaning thereby I am incurring the expenditure, and as on 31st of March 2027, it is in a WIP form. As on 31st March 2027, students, it is in WIP form. Then what will be the consequence? This is what it will be, students. You will be allowed the deduction in full. Just because you have incurred the expenditure, you will be allowed the deduction in full. Is that point clear to all of you, students? Every one of you, and that exactly is the point. But except for this. But those who say that, sir, what about if the business say is not yet commenced? Then there is no PGBP will be computed. Isn't it? And you are incurring the expenditure already for scientific research purpose. Say, for example, you want to start the research first. And once you do the research, there will be a breakthrough. And once there is a breakthrough, then only you will commence your business. So if this is your cycle, that first research, Then there is a breakthrough, and once you get a breakthrough, then you will open up the business. So therefore, if research is preceding your commencement of business, if research is preceding your commencement of business, then how much period before the commencement the research expenditure will be allowed? They say that 3 years. They say what, students? 3 years before the commencement of business. Before that, 3 years, whatever is the eligible expenditure. Now, what is eligible expenditure? Before commencement of business, students, what is the eligible expenditure? See here, students, over here, in this case. For, if you see here, in this case, for revenue expenses, students, just have a look. What is the eligible expenditure before the commencement of business? What is the eligible expenditure before the commencement of business? So if you see for revenue expenses, students, be careful. It is salary and what, students? And purchase of material. Two things, one and two. Purchase of material which is used for research. So salary paid to the employees engaged in the research and purchase of material, that is what will be allowed 3 years immediately preceding the commencement of business. Are deducted in which tax year? In the tax year in which the business is commenced. And if it is a capital expenditure, then students, then if it is a capital expenditure, students, you have to be careful. Huh? You have to be careful. Before the commencement, capex incurred again within 3 years, immediately preceding the commencement is deemed to have been incurred in the tax year in which the business is commenced. In this case, the business is commenced. But again, I am repeating this point, students. Land is not the eligible item. But not, can you see this one? But not expenditure on acquisition of land. So land has been excluded completely, students. So except for the land, other than that, plant and building will be allowed under 45(1). Even if they have incurred before the commencement of business, still it would be allowed. Only condition is that it should have been incurred before 3 years preceding the commencement of business. Within 3 years, that is within 3 years before the commencement of business, it should have been incurred. I hope that all of you are clear with this one. This is what section 45(1) deduction is all about. Now, students, there is a section 45(2). Now, institute has got one illustration, students, and therefore you have to be a bit careful on this particular part. I don't know, you people would have, no, I don't think so you have realized it. Students, this section earlier in the old law, it was covered under section 35. There was 35(2)(ab), a different section, students. 35(2)(ab). It was a different section, 35(2)(ab). Do you remember how much was the deduction? 200%. Then it got reduced to 150%. And now it is now 100%. I'm quite sure that in your inter-CA, you people would have learned at 100% rate. You people would have learned at 100% rate in this case. But there were times when 35(2)(ab), the old avatar of this 45(2), was allowed deduction at 200% rate. Just imagine the capital expenditure at 200%. Just imagine that. The kind of government incentivizing this category was tremendous. Then the government said that no, it's now we have achieved the purpose that we had to achieve. Let's now regulate it to 100%. See what it is then. So, first of all, this 45(2) is applicable only to a company and only one engaged in the business of, now students be careful, biotechnology, or B, manufacture or production of any article or thing which is not specified under schedule number 13. Can you see that? First is applicable only to a company and only one who is engaged in the business of biotech, or manufacture or production of any article or thing which has not been specified in schedule number 13. Negative list item. Just remember, like, negative list item. So again, in the biotech, that is pharma industry, or for that matter, manufacture or production of any article other than schedule 13 article. Now, facility that it should be again the SSC is himself doing the research program, and that research should have been approved by the Director General of Scientific Research, which is in New Delhi. So, Director General of Scientific Research, they should be the one who should be approving this program. And how much is the quantum? Now, please see, earlier it was 200%, then 150%, now it is 100%. Now it is 100% of the expenditure incurred other than the expenditure on land or building. Building is out. Students, just tell me one thing. Building is out. So you don't get deduction of building. You don't get deduction of building under 45(2). Does it therefore mean, so be careful, does it therefore mean that you don't get deduction of building at all if you are in 45, if you are under this particular regime? And the answer is no, students. The deduction of building, you get it from 45(1). The deduction of building you get from 45(1). For rest of the capital expenditure, 45(2). Like plant and machinery, etc. That is 45(2). But for deduction of building, the deduction of building would go under 45(1), students. It will go under 45(1). Then somebody will say, then sir, what is the use of this section? Yes, currently you may find it a bit obsolete. True, but just imagine the era. Which era? Era of 200%, 150%. What used to happen? When these SSC who were in biotech or manufacturing of article or thing other than Schedule 13, and their research was approved by Director General of Scientific Research, then whenever they used to purchase plant and machinery for scientific research, then the deduction used to be 200%. Whenever they used to construct the building, then construction of building, is it eligible here? No. But where it will go? Earlier section, which is 100%. Now today what happens? Today what happens is that today here, when you purchase the plant for scientific research, say a biotech company is purchasing the plant for scientific research, it claims deduction of 100% here. And if it is constructing the building for scientific research, then it goes to 45(1) and it claims 100% there. So only now the difference is on the citation of section, whether it is 45(2) or 45(1), that's the only difference. This 100% has done this. What about land? Land, any case, students, is not allowed to you as a deduction at all. Land is not allowed to you as a deduction at all. Why, students? And that exactly the point in this case. Now, students, tell me one thing. If you have got the deduction of the capital expenditure over here, now question that arises over here, students, is, be careful. Few questions arises over here. And the question, students, you can take a note of this one. Asset used for scientific research. Now, you have claimed the deduction. And so this is important. If the capital expenditure deduction on scientific research, so this is important. This is then the notes, but I'm just giving you two separate because this is an important one. If the capital expenditure deduction on scientific research remains unabsorbed, remains what, students? Unabsorbed, then students, this is an important. Are you aware of what will happen? Say I'll give an example. Let me give an example so that you are clear on this particular part. Supposingly, in this case, supposing, students, in this particular case, PGBP before section 45 is say 15 lakhs. Okay. Revenue expenditure on scientific research is say 10 lakhs. Okay. And capital expenditure on scientific research is a 25 lakhs. So can I say in this case, students, can I say therefore in this case, unabsorbed capital expenditure on scientific research is how much? In this case, students. So out of 15 lakhs, students, this first 10 lakhs will go, 5 lakh remains. 5 lakh remains. You can only adjust up to 5 lakhs. So how much is unabsorbed? 20 lakhs. 20 lakhs, students. Are you aware of the treatment that will happen over here? Are you all aware, students? What is the treatment that is going to happen over here? Any idea in this case? So, students, any idea? Let me give you the last chance and let me see if you are recollecting anything that you have done in your interest. If you have done this particular part, I'm not aware. So, I'm just asking all of you. Any idea, students, on this particular part? What is the treatment? Let me ask you all, students, quickly. In this case, rather exactly. Very good. So you are aware of this particular proposition. So few students are indeed aware of this particular proposition. Kanhaiya can be carried forward, but carry forward Kanhaiya is what? The question that arises is that it can be carried forward as what? As a business loss? If you say, sir, it will be carried forward, then the question arises, how do I carry forward as a business loss? So business loss, I can't. Because I told you already, I've made you visualize already. How I've made you visualize? There is a business division, manufacturing division, that is my business. And this is my research division, students. This is my research division, a separate division altogether. So there is a business division and then there is a research division. This expenditure, students, that I have incurred is in my research division. And there is an unabsorbed capital expenditure. So students, this unabsorbed capital expenditure, be careful. The law says that it will be treated at par with that of unabsorbed depreciation. And if it is going to be treated at par with that of UAD, then what are you going to say, students, in this case? It will be allowed to be carried forward to that many number of years. The way we have got the UAD concept, isn't it? So just write next to that. Yes, very good. So just write, students, in this particular context, the unabsorbed capital expenditure of rupees 20 lakhs, the unabsorbed capital expenditure of rupees 20 lakhs will be deemed as, will be deemed as unabsorbed depreciation, will be deemed as unabsorbed depreciation, and accordingly it will be treated and adjusted. It will be treated and adjusted in the same manner as that of UAD. Now you can read, students. Now just read this 45/7, this particular part, all of you. Quickly. So what it says, students, what it says that capital expenditure on scientific research, which cannot be absorbed by business profit of the relevant tax year, is treated in the same manner as unabsorbed depreciation. under section 33(11), carry forward to the immediately succeeding tax year and treated as the allowance of that year. Students, I think all of you are aware that unabsorbed depreciation in the subsequent year is allowed to be adjusted against the income of the other heads, except for one, which is that salary. Yes, Radha, you got it right. Except for one, which is salary, the unabsorbed depreciation in the subsequent year is allowed to be adjusted against all the other heads of income except for salary. So that is what it is, students. Now, students, the last particular point, which is there for this particular concept that we are discussing, that students, what will happen? Say, for example, the last concept, which is there on this 45.1 and 45.2. Now, students, say scientific research asset. Let's take this one. Scientific research asset, students. On this scientific research asset, you have claimed a deduction. Scientific research asset, deduction claim. Deduction allowed under section 45.1. Say, for example, 45.1. How much is allowed? Say 20 lakhs. Okay. Now, question therefore is, students, is there any lock-in period? That this many number of years I am supposed to use the asset for scientific research? There is no lock-in period, students. So here, students, there is no lock-in period. You can just keep taking a note of it. No lock-in period. Primary. No lock-in period means that is the time limit. That is no time limit. For how many years it should be used? It should be used for scientific research. No lock-in period, that is no time limit. No time limit for how many years it should be used for scientific research. Is that clear to all of you? Fine. Now, on this particular note, let's develop a case. So subsequently, what could happen, students? Subsequently, after any year, what could happen? Two things can happen, students. One is that you may sell the asset. Students, you may sell the asset. You may sell the asset outside. So subsequently, in this case, the scientific research asset is transferred outside, or the second particular option that you may do is that the scientific research asset is used for business purpose. One of the two can only happen, students, in this case. Is transferred outside or it is used for business purpose, students. And that is what can happen in this regard. Now, in this context, say for example, herein, if it is sold directly outside, students, if it is sold directly outside, so what has been sold? Students, what has been sold? Tell me, what has been sold in this case? It is an asset that has been sold. So if a asset, which is a capital asset, which we have sold, then where the chargeability should be attracted? Where the chargeability, students, should be attracted? The chargeability should be attracted under the head capital gains. The chargeability, students, should be attracted under the head capital gains. Do you all agree? Because the asset has been sold. But be careful, students, over here. The law says that to the extent, so whatever is the sales consideration that you have received, to the extent what? To the extent the deduction that was claimed earlier, that much amount of the sales consideration will be charged under the head PGBP only. Will be charged under the head PGBP only. So I gave you the deduction in PGBP. So subsequently, any recovery would also be under the head PGBP. It was a capital expenditure for which I gave you the deduction outrightly under the head PGBP. So subsequently, the recovery to the extent of deduction, that also will be charged under the head PGBP. So up to 20 lakhs, where it will be charged? PGBP. And say for example, students, if the recovery is say rupees 30 lakhs, if the recovery is 30 lakhs, sales is say 30 lakhs, then the excess over and above only will go and be charged under the head capital gains. The excess over and above will only go under the head capital gains. So please write over here, so I'm dictating to you for this one. Point number one, sale scientific research asset is transferred outside. Please write for this first. All of you. All of you. To the extent of the deduction claimed, to the extent of the deduction claimed, to the extent of the deduction claimed, under the head PGBP, comma, the sale proceed shall be chargeable. The sale proceed shall be chargeable under the head PGBP. Shall be chargeable under the head PGBP and the amount recovered, the amount recovered over and above, the amount recovered over and above the sale proceed, over and above the deduction, the amount recovered over and above the deduction will be charged under the head capital gains. Will be charged under the head capital gains. Now students, if you see over here, scientific research is used for business purpose. If it is used for business purpose, means now you are going to use it for manufacturing, isn't it? Which means that now, because the asset is going to be used by the business division, what will happen, students? It will go to enter into the block. And if it is going to be entered into the block, tell me at what value the asset is going to be entered into the block. If the asset is going to be entered into the block, my question to all of you is, at what value the asset is going to be entered into the block? Quickly, students. And indeed the answer, students, very good. Already I have claimed the deduction in that actual cost. If you remember, I told you that PDF, students, tonight only you see. In that PDF, the three principle I gave you, that keep this three principle in mind, and then you go through the entire table. And in that one table, one of the item you will find what? That if you have claimed the deduction of the asset earlier under any other provision of the act, then the actual cost will be nil. So therefore, the asset here, what will happen? Asset will enter into the block. Into the block at what value? At nil value. At nil value. I hope that all of you are clear with this one. Every one of you. The one and most important particular point, students, I want to discuss with you. Students, this is the most important particular point before we hit the break. Students, one of the most important point. And you have to write this in your notebook. Right? In fact, I'll dictate to you. And by dictating itself, you yourself will come to know this particular part. Please write. Please write. Where the alternate tax regime, where the alternate tax regime, where the alternate tax regime applies, where the alternate tax regime applies to the SSC, where the alternate tax regime applies to the SSC, during the tax year, then the deduction under section 45(1), the deduction under section 45(1) in respect of the revenue expenditure, and the eligible capital expenditure will be allowed as deduction. Full stop. Students, now this is such an important statement. And now you can just imagine, you people are aware, students, you people are aware that once you are in the alternate tax regime, many deductions has to go. But few of them are something government wants you to keep. This section is one among them. Remember, students, in your inter-CA, now this actually shows the importance that the government is placing on the research. Just imagine why that the government, while you are in the alternate tax regime, you are still being allowed this particular deduction. Why so much benevolency? Why the government is showing so much mercy? Because the government wants research, irrespective of the regime that you are, the government wants you to do the research. And that's the only way probably we will be from developing, we will enter into the developed economy era. This section, students, whether this regime or that regime, will survive. Same is the other section. Remember your inter-CA, students, you have done 80JJAA. That employment, new employment, for that there is an extra deduction for the next 3 years. That section deduction also applies even though you may have taken the alternate tax regime. Even though you may have taken what? The alternate tax regime, even that survives. Even that is available. Why? Employment is the biggest particular need of the country at this stage. You all are aware of it. And therefore, irrespective of the regime, these priority sector students, this priority sector or the priority objective has to survive, irrespective of whichever regime that we are in. And that exactly is the point, students. I hope that you can relate to the policy level why this amendment are still, why this section still hold importance, irrespective of where you are. Irrespective of where you are. Is that point clear to all of you, students? Now, students, in this particular context, my only humble suggestion for all of you, the second part, students, if you may, this is the simplest part. Second part, students, is about giving the donation. You may just read this and that is it. Students, be careful over here. Giving donation and taking the deduction. The second part is what, students? Giving the donation and taking the deduction. Donation to whom? This is 45.3. I told you already 45.3. 45.3. Give donation, take deduction. Now, say for example, when I was a child, people used to ask me, "What you want to become?" I was saying, "I would become scientist. I want to become a scientist." But by the end of the after I graduated my school, then I came to the college. Then I realized I wanted to become a CA. The scientist was something what my like a childhood dream. But then thereafter, as we have grown up, and then the goals and the objective of life also change. But then when I was passing through IIT Bombay, then I realized that even this was one of my dreams that I had once, probably just to be a part of this. But then I thought to just give it up. Anyways, you have to move on with your life. Now you are a CA. You may be in the practice. You are doing in your profession, isn't it? So now I am a chartered accountant in a practice. I have got a professional income. So I'm just giving an example. I've got a professional income, and I am giving the donation to this IIT. Okay. Now, is it to do anything to my business? Is it to do anything to my business? Answer is no. This has got nothing to do with my business. I am giving the donation to IIT. Will I be eligible to claim a deduction in computing my PGVP? Answer is yes. 45.3 allows me the deduction trends, and this is exactly what 45.3 does. So these are the list of students, the institution, association, university, college, or whatever it be, or some approved company to whom approved by the, again same, Director General of Scientific Research. They may approve some company who are doing the research, and if to those company, if you give donation, you get deduction in this case. Then you have got national laboratory, university, IIT specified this thing, again you claim a deduction. So that is what it is in this case. Now the question therefore is, students, be careful over here. Now there is one very important part which has been there. Just see, students, approvals are being given. Approved university. Can you see this one? There is one very important thing that is there. Students, just be careful on this one. A very interesting part. Students, what has happened is that when I gave the donation, at that time this institution was approved. When I gave the donation, these institutions or these colleges were approved. But by the time I am filing my return of income, in the next year, when I am filing my return of income, I find a notification from the government that these institutions the approval has been taken away. For whatever be the reason, the approval has been taken away. Means approval has been cancelled. At the time of donation, it was approved. By the time I am filing the return, I find that this approval has been cancelled. This company is no longer a approved institution. Question therefore is whether I can still claim the deduction under 45.3, whether I can still claim the deduction under section 45.3. That is the question, students. And the answer, students, for this is 45.5. And what does this section 45.5 say? Is that even at what you have to see for deduction purpose under 45.3 is whether this institution was approved at the time of giving the donation. If this institution was approved at the time of giving the donation, then whatever happens subsequently will not have any relevance so far as the claim of deduction is concerned. The deduction would be allowed. The deduction would be allowed, students. And students, now the most important point which I have already have explained to you is this particular point. Can you see that, students, over here? This 2.6 I have already explained to you. And what is that, students? In this case, 45.1. Be careful, students. 45.1 will be available whether you are in the normal tax regime or whether you are in the default or alternate tax regime. Doesn't matter. 45.1 will continue to be available. 45.2, students, they will not ask you. 45.2, technically speaking, right now, students, I must tell you one thing about 45.2. 45.2 now is only academic right now. Nobody goes in 45.2. Everyone is in 45.1 only. People used to go in 45.2 in those particular year, which I'm talking about it, when 45.2 used to enjoy 200%, 150 per 150% of the deduction, when there was a weighted average deduction. That was the difference between 45.1 and 45.2. Now weighted average has become 100. So and in 45.2 you also know building you don't get deduction. For building you have to go to 45.1 to claim deduction. So it is more academic now in that particular way, students. So people probably go to 45.1 and they claim deductions over there. So 45.2 technically speaking has lost its relevance. So 45.3, students, tell me what 45.3. If you have taken the alternate tax regime route, then alternate tax regime, students, alternate tax regime, then students, what happens? No deduction. No deduction. That is what it is. Means if I am a CA, I have given the donation to IIT primary. If I have gone with the alternate tax regime, then I will not be getting deduction. Means for me, It's a default tax regime. Alternate tax regime for me as an individual, it is a default tax regime. So if I'm taking the alternate tax regime, then I will not get deduction. I have to opt out and I have to go to the normal provision. And under the normal provision, then these donation which I'm giving, I will be eligible to claim deduction under 45(3) under the normal provision, but not under the alternate tax regime. Just be very clear about it. But what about 45(1)? If I'm doing a scientific research for my business in which I'm incurring revenue and capital expenditure, whether I'm in alternate tax regime or whether I'm in the normal tax regime, whether deduction of 45 subsection 1, will that be available to me? Answer is yes, it will be available to me. Is that point clear to all of you students now? All of you? Any doubt students now you have on this 45? Just let me know. Students, any doubt on this 45? Or else then we will take a break. Quickly students.
Sir, with regards to 45 subsection 3 donation, I had a query.
Yeah.
Like, since you talked about subsequent withdrawal, but sir, now what happens that you have already given the donation when it was approved, but then in the next tax year it is getting withdrawn, but actually you are a default tax regime holder. So at the end of the tax year, can you claim under the normal provisions? That is the query.
I'm in the default.
Yeah, that means you are the person upon whom already the default tax regime is applicable.
Uh-huh.
So then the next tax year you have planned ki, okay, since 45(3) would be getting cancelled, so I need to opt out. So will that be allowed doing that? Yeah, that's what I'm asking.
Yes, that will be allowed. Sure, if I'm opting out, see, at the time of taking the deduction, at the time of taking making the donation, sorry, at the time of making the donation, if they are allowed, that they were notified, they were an approved institution. So I don't have to worry about this deduction will be protected. In the next year, when I'm going to file the return, the deduction is protected. That will not happen anything on that. Yes,
Okay.
if I opt out and I'm, say, for example, under the normal provision next year,
Yes.
and by next year it is already been denotified, means it is no longer, it is
Correct.
available for deduction. And I'm giving the donation, then I have to blame myself. No, this is something the SSC has to blame himself to giving donation to such institution. But at the time when you are giving the donation, if that is approved, so deduction is protected already. Now, you in the next year you have to choose whether you who are in default. In the default, you will not get it because I am an individual. Default means what? Default means alternate tax regime. I will not
Yes.
get it.
Hmm.
So if I want to claim the deduction, I need to opt out.
Okay. Even before claiming the deduction, you should be under the normal provisions. So you should opt out even before donation giving the donation.
No, that is not required. That is a good query, but that is not that option I will exercise next year only. When I am
Okay.
giving this donation, that
Yes.
time I don't have to decide whether I am in the normal provision or I am in the default provision. That is not the
Okay.
time of decision.
Okay.
Only thing that is to be seen at the time of donation is whether that particular institution was it approved or not. That is it.
Okay.
Next year, when return filing stage is going to happen for this current tax year, the next year, then the decision making will have to be done.
Okay. So that is the thing. That is the catch over here.
Yeah. So at the time of donation, you don't have to
Yeah.
see whether you are in the default or you are in that. That is of no relevance. Only
Okay.
relevance is at the time of donation is that institution should be approved.
Should
That
be
is the
approved.
only thing.
That's it, sir. So other queries, sir, at the end of the session, I will ask.
Okay, not an issue.
Okay,
So
sir.
we'll take
Thank
a
you.
break, friends, 10 minutes maximum, and then we'll come back quickly. Then we have to do this one more section, and then I'll introduce the CG charging section with all of you. Okay? See you then, friends, in the break. After the break, sorry. संख्या जी 10 मिनट का ब्रेक लेते हैं Now, students, the next section, students, which is there, is about the investment link deduction. The 35 AD that you all are aware, the 35 AD students, now it is section 46. Now it is students section 46. Earlier it was 35 AD. Okay. Let's have a look, students, the quantum of deduction of this. You all are aware, students, there is a specified business. Of that specified business, there are specified capital expenditure, the eligible capital expenditure. That eligible capital expenditure will be eligible for deduction 100%. That is what the section is all about. So specified business against which there is a eligible capital expenditure, not all. Remember, in the scientific research, we have seen that, like for example, land is disqualified. And for 45(2), land and building is disqualified, but invariably, even though land and building is disqualified, building gets deducted under 45(1). For section 46 students that we are doing over here, section 46 students. So far as section 46 is concerned, what did I told you, students, in this case? 46, you have the deduction, students, which is in respect of 46. You have the deduction, students, in respect of, indeed, the specified business, and of that specified business, the eligible capital expenditure. Eligible capital expenditure. Of that, you get 100% deduction. So ultimately, students, you get the quantum and timing. If you see over here, what exactly, it's only a list. Over here, students, if you see quantum and timing, 100% of the capex incurred wholly and exclusively for the purpose of specified business carried on by the SSC allowed at his option during the tax year. 100%. In this case. Now, this obviously is an optional scheme, which means that whether the SSC wants to take 100% deduction of the eligible capital expenditure and take no depreciation, or he go with what? He go with the depreciation allowance, for which he has to give up 35 AD altogether in that case. Isn't it? That is what it is. Now, friends, over here, if you see, if for the capital expenditure for which you are claiming deduction, students, for the capital expenditure for which you are claiming deduction, students, be careful over here. What they say very carefully, students, again the same thing. If you are making the payment in excess of rupees 10,000, the same condition, students, we have seen. This 10,000 condition was for also disallowance. Cash payment in excess of 10,000 on a single day, disallowed. The same 10,000 particular part you have seen in the actual cost also. In our negative, remember, in actual cost, you have to reduce something and then you have to add something. Similarly, for section 46, specified business, the eligible capital expenditure minus 10,000 students, you will do of those portion of the capital expenditure which you have paid otherwise than by way of an account paid check or by draft or those prescribed electronic means. Simple word, in cash. That much portion of deduction will not be allowed. Is that clear to all of you, students? Now, here the next point is about, students, what if the expenditure is before the commencement of operation? So they say that fine. Now, please be careful in the case of this one, in the scientific research, you have a time limit earlier, but 3 years maximum earlier before the commencement of business. Here, students, we don't have any timelines, and rightly so. Think logically, why there is no timelines here? Why there is no timelines here, students? The reason is very clear, students, over here, that these are the high intensive investment sectors. Like for example, hotel. Hotel is also covered in section 46. So say for example a hotel which is covered in section 46. Now construction of hotel will take time. And only after the hotel is fully constructed that I will be commencing my business. So therefore it will be very much, therefore students, it will be very much against the SSC if you give a timeline that this much is the only timeline before which you have to complete your capex. That doesn't work. And therefore government recognized this concept that you cannot give a timeline before commencement that up to this much we should have completed our capital expenditure allowances. So there is no timeline over here, unlike in the case of section 45, which had a 3 years timelines before the commencement, maximum 3 years. Only condition that is there, only condition students over here is that you have to only ensure that the expenditure is capitalized. Expenditure is what? It is capitalized. Capitalized in the books of accounts. This is the only particular condition, students, which is there. And that is it. So this is the only criteria, students. Capitalize the expenditure in the books and you claim the deduction. That is it. This is for before the commencement of business. Now, students, these are the list of the business which has been there. Obviously, you just can't by heart it. But at least whenever you are traveling in section 46 students, you at least go it once. So what are the list? Let's quickly read it together. Setting up and operating a cold chain facility for specified products. Date of commencement is on or after 1st April 2009. Setting up and operating a warehousing facility for storage of agricultural produce. Again 1st April 2009. Laying and operating a cross-country natural gas or crude or petroleum pipeline. Storage facility being an integral part of such network. So pipeline project, the gas and oil pipeline project cross-country. Like for example, India, Iran, the gas pipeline project, 1st April 2007. Point number 4, building and operating a hotel of 2-star or above category anywhere in India. 1st April 2010 should be the commencement date. So just imagine the students, think practically. Like say for example, Taj Hotels. Now Taj Hotels have got many properties, which hotel that they have already have commenced before 1st April 2010. And there are many new hotels also they are doing it. Remember, many of the hotels are getting constructed. You will find the news. Taj Group, say ITC Group. So they are in fact constructing the hotels now also at this point of time. New hotels are coming, getting created, and those are 2-star and above. In that particular case, for the new particular hotel which is getting constructed, whether you will be getting 100% reduction of the eligible capital expenditure, answer is yes, you will be getting it. You will be getting 100% reduction of that. So that is how students you have to see for the same way hospitals and other entire particular category. So you can just read down this entire list. These are the list of the eligible specified business. You are into this business, you incur the capital expenditure. If they are eligible under section 46, get full deduction. That is what it is. Now, that is what it is, students, in this case. So always, students, just have a habit of reading this entire list once, whenever you are. Now, students, there is this comparative snapshot which has been there. Just have a look, 45, 46, and the next one, which is 47. 47, students, is for that particular agricultural extension project. Just a comparative point immediately, which has been given to you. Nature of the expenditure, 45, it is revenue and capital both. Section 46, students, it is only capital expenditure. 47, students, if you see, again, revenue and capital both. So 46 that we are discussing right now does not cover revenue expenditure, the revenue expenditure of the business will be covered in that particular normal section only. It is only the capital expenditure for the specified business that we are giving deduction under 46. So this distinction should be known to all of you. What are the exclusions which are there in this case? The exclusion for 45 that we have seen, land is the only exclusion for 45(1), and 45(2) we have got land and building. 45(2) you have got land and building. But just have a look to section 46 now, students. Here, the exclusion is not only of land but also of goodwill and financial payments, financial instruments, sorry. And then there is one negative category. What is that? The 10,000 payment that you make on a single day in cash. Then that portion of the capital expenditure which has been paid in cash in excess of rupees 10,000, the entire amount so paid will be disallowed. Normal thing, not a big deal. Okay, so this is one thing which has been attached in this case. 45, who is the eligible SSE? The SSE under 45(1) and 44, like those who are undertaking the scientific research program. Those who are undertaking the scientific research program, they are the one. And in 46 students, the SSE carrying on the specified business. The SSE who are carrying on the specified business, they are the one. Just have a look. Pre-commencement expenditure. This is what I told you, students. Is there a capping of 45? Was there a capping of 45? Answer is yes. Maximum 3 years. What about section 46, students? Is there a capping? No. Only requirement is that if the capital expenditure is incurred before the commencement, requirement is that it should be capitalized in the books. That is it. Then whatever is the capitalized amount in the books, when you commence your business, the entire capitalized amount, you will be allowed the deduction. The entire capitalized amount, students, you will be allowed the deduction. Is that clear to all of you? Everyone? After this, students, we have got depreciation on the same asset. After this, depreciation on same asset. Will you be getting depreciation? Obviously, no. When you are already have taken the deduction under these sections, where is the question of depreciation? Isn't it? That is the point. Now, be careful, friends. This is what is very important. Treatment of loss. I already gave you the example, students, in this case. I already gave you the example, students, in this case. Here. Students, I have told you that the loss which has been there, unabsorbed capital expenditure will be allowed to be carried forward. Students, unabsorbed capital expenditure would be allowed to be carried forward just like what? Students, just like what? Just like UAD. So far as the 46 section is concerned, as far as the specified business is there, students, so far as the specified business is there, the deduction primarily, if it remains unabsorbed, then students, can you see this is ring fenced? Ring fencing means what? Means now this will not be allowed to be set off against any other income other than the specified business income. No particular income would be allowed to set off, even though, say, for example, students, you may have got some non-specified business. You may have got some non-specified business. So whether from the non-specified business, students, can you do the set off of this expenditure? And the answer is no. And the answer is no, students. So it is only from the specified business income that the deduction would be allowed. Is that point clear to all of you? Now, say for example, students, say for example, ITC, I was giving the example of ITC. ITC have got the hotel business, which is, say for example, a specified business. And it has got, say, they are also manufacturing of the stationaries. Now they are also manufacture of biscuits. You see the ITC company manufacture of biscuits. So they are into multiple product. Supposing they get a loss in that particular specified business, which is the hotel business. So can they set off that particular loss from their other business, which I gave the example, like the stationaries, or for that matter, the biscuits and other items, food products? Answer is no, students. What will happen? This loss from the specified business will be carried forward in the subsequent period. And be careful, students, over here, in this case, be careful. You will have to carry forward. There is a condition to carry forward, and to the condition to carry forward is, students, you need to file the return of income within the due date. The due date under section 263 subsection 1. Now the return filing section, students, earlier it was 139. Now you will learn 263 subsection 1. So within the due date you have to file the return, and their loss would be allowed to be carried forward. The loss would be allowed to be carried forward. How many years the loss will be allowed to be carried forward? For unlimited years. And tell me, students, in the next year, from which income it will be allowed to be set off? Same specified business income. Same specified business income. Is that point clear to all of you, students? In this case, that exactly is the point, students, over here. Now, students, only one thing which I just wanted to tell you. Tell me, was there any lock-in period for the scientific research business? Was there a lock-in period for a scientific research business? Answer is no. I told you already. No lock-in period was there. Like whenever the scientific research was over, thereafter you can do whatever you want. But there will be consequence. Here, students, there is a lock-in period of 8 years. There is a lock-in period of 8 years. If within 8 years, if the asset on which you have claimed deduction, if the asset on which you have claimed the deduction, if that ceased to be for the specified business, if that is ceased to have been for specified business, then whatever deduction, students, that you may have claimed, that will become a deemed income. Deemed income, students, obviously, because lock-in period is 8 years. So within 8 years, if it ceased to remain in that specified business, then in that situation, students, it will be considered as deemed income. Is that point clear to all of you, students? Okay, ceased to remain for specified business. But supposingly, students, I have sold that particular asset. I have sold that particular asset. Okay. Then, students, I told you, you may have forgotten by now, in the charging section, students, one last was left. I told you that this charging section, I will do it when I will do this section 46, which is 35 AD. So students, today, after the lecture gets over, now, I just want you to do this homework. Just go and read that particular PDF, section 26, last clause. And now you will relate it. That if supposedly you have transferred or it has been discarded, primarily or demolished, means in this case you have thrown away. So whatever is the money that you have received in disposing it off, simple words, whatever money that you have received in disposing it off, students, that will be chargeable under that PGBP. Entire amount will be chargeable under that PGBP, students. So you dispose of whatever money you get, entirely it will be charged under that PGBP. This is what it is. And that is what section 26(2). Okay, so just as a homework, quickly, immediately after the lecture gets over, I want you to read this section. So whatever money that you receive on disposing of this particular asset, that entire money will be charged under the head PGBP in that particular context, students. Okay, that is how it is. I now give an example, one more example, students. Okay. Example is, in this case, students, supposingly you get a that example. Let me in fact try. In fact, this is one of the things which I've kept in the adjustment. So let me in fact target you in this case, in that question itself. Now you students tell me, in this particular scenario, survives, the last one is very important, survives the concessional regime. What is concessional regime? The alternate tax regime, because concessional tax rate is there, na? Concessional regime means, students, alternate tax regime. Does it survive the alternate tax regime, which is the concessional tax regime? Only 45(1) will survive. I told you, scientific research, whether you are in the normal or whether you are the concessional, in both the cases it is allowed. 35 AD or 46(1) now, 46 section, 46 section, students, it does not survive. What does it mean? This will have to go. So if you are in the alternate tax regime and you are in the hotel business, say for example, hotel business, then whatever is the capital expenditure that you will incur, students, whatever is the capital expenditure that you will incur, eligible capital expenditure, for that, forget the deduction under 46, you have to come from the root of depreciation only. Meaning thereby, these eligible capital expenditure will be capitalized in the books and on which you will claim the depreciation. Is that point clear to all of you students? Everyone. Now students, just ask me the doubt students that you may have over here on this 46 quickly.
Sir, I'm not clear about the 46 at last, how it is not surviving concessional regime.
The meaning thereby, it doesn't 46, the specified business, if you want to take the concessional tax regime, you have to give up. 35 AD will not be eligible. The 46 section will not be available. So therefore, then if it is not available, means what? Means when you incur the capital expenditure for, say, setting up of the hotels, and you are in the default alternate tax regime, which is the concessional tax regime. Concessional means the alternate tax regime. So say you are constructing the hotels. Question is whether you will be getting the deduction of the construction under 46. Answer is no. Then you will say, sir, then what is it a waste? By constructing the hotel, what about the capital expenditure which I've incurred? That you have to take to your block of asset. And through the block of the asset, then it will come through the depreciation route. So therefore, you don't get 100% deduction primarily. 100% deduction is only then available for the scientific research that we learned in 45 subsection 1. In 45 subsection 1.
Yeah, then what is the point of 46 if it was being added to the blog itself?
No, generally I'll tell you, I'll practically just think of it. How it will go. A person who is in 35 AD or 46 1 now, which 46 section I'm talking, they
Uh,
don't go for the
yeah,
alternate tax regime there.
yeah.
Just think of it. ITC.
Hmm.
ITC, a company. Obviously, these are the think practically now, visualize practically in the economy how it will unfold. Company like the ITC or so, hotel business. For construction, one man hotel, 50 crores, 100 crores, 200 crores, 500 crores. Capex that they incur. And they know that this section 46, which is the old section 35 AD, new section 46, this section has the capacity to give the deduction in one shot, 100%. So obviously they will prefer that. And if they will prefer that, they will never opt for what? They will never opt for alternate tax regime, which is known as the concessional tax regime. So if you see practically when you are doing this capital expenditure thing, you will not enter into this section. So you'll say then for whom this section, who will then under this business, specified business, who are the SSC who will go under 46(1)? The one, like for example, I'm in the hotel business. I've got two hotels. Okay. And they are 2-star above. And I don't intend to now construct any further new hotels in my life. I just want to maintain these two hotels. Then do you think that for me, this alternate tax regime will have any sense? If I don't intend to construct any further hotels in my life further, I'm not going to incur the capital expenditure on the hotel and all. So for me, I know that if I go to the alternate tax regime or a concessional tax regime, I'll at least get a concessional tax rate. So a SSC like me, who is not going to construct any new hotels and all, so I will not go in this particular section. Instead, I will go for the alternate tax regime. And by taking the alternate tax regime, I will forego this deduction. I'm foregoing this deduction, and I say that I'm happy. Let me take the normal depreciation route for any minor capital expenditure that I do in future. These are the SSC. But a company like ITC, you have to check primarily the benefit, cost and benefit analysis. So a company like ITC, they will prefer to go with the 100% deduction under this category because this is one shot deduction of huge 100 crores, 500 crores. It depends on the kind of the amount of capital expenditure that you incur.
Okay, got it, sir. For the very much high turnover based hotels which
Yes,
has been constructed, then 46 is good,
yes,
holding good.
perfect.
Otherwise, then please go by the concessional regime in which automatically it is not allowed.
Not
and
allowed.
normal
Perfect.
depreciation route is there.
Perfect.
Yes, sir.
Perfect. Perfect. Perfect.
Sir,
Don't
one more thing.
prediction. Yeah.
Yeah.
See.
Uh, like, sir, you were also explaining that scientific research expenditure, right? Only deduction is 100%, so there is no point of no depreciation, right? There is
Perfect.
no depreciation.
On the scientific research asset, not on
Yeah.
the business asset. Business asset, you will
Sorry.
continue to claim depreciation. Only on the scientific research asset, because you already took the deduction under 45 subsection 1. Now, where is the point of claiming any depreciation? The
Yes.
amount has already become zero after claiming it.
Actual cost is nil
Perfect,
specifically.
perfect, perfect,
Okay, sir.
perfect.
Got it.
Apart from this, Kanaya, any query that you have on this particular part? So students, I will be now involving the practical questions now going forward. All the like profit link deductions. Now what is left over here is like profit link deduction. Small like 43B. I could sense some discomfort that you people have on that payment basis thing. Like I could relate it when I was talking about it interest part when I was discussing on that particular thing. At that stage, I realized that there is a bit of discomfort on that particular part. This is where students I'm going to put some question on practical side so that you know how to really practically solve those particular things and you will be relevant on that regard. Same also, so therefore I'm going to now get into this mode of practical part, so that will also help to revise the provision and also more importantly apply the provision in a given scenario. Okay, so going forward students, now next session, because this session was the only session primarily whereby we have closed the loop of the PGBP barring presumptive income. There are two presumptive income students. One presumptive income you will learn in the module of non-resident taxation. The presumptive income that you learned in inter-CA, that is there over here in this case. Okay. And some few section like general deduction of section 34. That probably I will link it up with this and then I'm going to take it across to all of you in the next particular class. Now, students, any particular query that you have over here, please tell me. Kanaya?
Yes, sir. I am having. That's why. Is it the end of the session right now, sir?
Uh, Yes, you can effectively say. I was supposed to start the charging section of capital gains, but I think I will. Okay, you can start asking the
So
questions.
you continue, no issues. That's okay.
No,
If
no, it's okay. Queries are there. You can just let me know. Not an issue.
okay,
Please go ahead with that.
sir, you had given WDV in special cases the inconsistencies one.
Yeah.
So yeah,
Have you all got hold with this WDB in the special case? What was that?
yes, sir. So here, that's what you had given 41 2A, 41 2C, 41 3, and 41 4. So these were the four sections which you had given.
Yeah.
So I had analyzed it, which I have come to one single conclusion that one unifying principle was there is no fresh tax base and only old tax base is continuing in the new hands. Also, one more thing, several inconsistencies which per section by section I actually noted down. So, and I have the queries with regards to it. So, the very first inconsistency was like the WDV versus actual cost. Like what I explored is actual cost is not necessarily historical expenditure which is being incurred by the transferee. So that's what I observed that under the you can say, sir, what I'm trying to explain now, sir. I hope you are getting it. What I
I'm
got.
getting it. Yeah.
Okay. Then the another inconsistency which I noted in a very subtle way in all this session was under the amalgamation and the holding subsidiary one. It is saying that immediately preceding tax year. But under the demerged company, under the resulting company, it is saying that immediately before demerger. That is also which nitty
Actually,
gritties I
this is
was.
the biggest point that is there.
Yeah.
This is the
So
biggest inconsistency which is there, wherein one is talking about, if you see, students, what in fact does the last particular session, inconsistency, Kanaya. You also pay attention to the inconsistency which I was talking about it. I have listed down four sections. I've given a category for all of you. One WDV is saying WDV as on 1st of April. If you see the calculation na, of the last tax year and of the last tax year minus the depreciation that he has claimed in the last year. So it means it comes to 1st of April. And in the second one, which you are saying also, it talks about immediately before the demerger. Before the demerger means say for demerger may have happened on 31st of July, 30th of 1st of July. So WDV before that, immediately before that means 30th of June. So if you now read that thing, now since I've given you the example, Kanaya, you invest, all the students invest that particular thing. One WDV will take you to the 1st of April of the current year. And the second WDV is immediately before the event has taken place. This is a big inconsistency because what is inconsistency? Through a practical question, students, maybe they see these questions will not come, but at least you should know that these is an inconsistency which actually is coming from the last till now in this regard. And therefore, this is something very difficult to reconcile in that context. Very good, very good.
Yes, sir. Another inconsistency, yeah, in LLP conversion, na, the company is
Yes,
getting
yes, yes,
conversion.
yes,
So
correct.
WDV
Yeah,
as on the
yeah,
date
yeah,
of,
yeah, yeah. Perfect. You got it. Got it, brother.
and then, sir, one thing like, see this special provisions versus the section 41, which you were saying the block of assets concept is being applicable. But now here the main query is coming due to this kind of question of WDV of the assets transferred. So, sir, I'm just framing my question like if I have a block, say machine ABC, and only machine A is going into the demerger. So, how will I identify specifically WDV attributable to the
No,
machine A? Yes, sir. When depreciation is normally calculated
no, it
block-wise.
will
So
be
that's
not for demerger happens of the unit. Doesn't
okay.
happen for an asset. Demerger as a concept is
Yes.
actually an undertaking. Like for example, Tata Group. Tata Group
Hmm.
have Tata Motors, Tata Chemicals, many other companies. Say TCS. So one unit is demerged and made as a company separately. That's a demerger. So demerger is in relation to the unit or the division, not in relation to an asset. And that is the reason why in that division or in that business, whatever are the assets, like I saw initially everything was under Tata Sons, Tata
Hmm.
Motors, Tata Chemicals, TCS.
Yes.
Then what we
Yes.
found, these particular units have been demerged and made as a separate company.
Hmm.
And the fact that it's been made as a separate company altogether, then in that case, whatever are the assets belonging to that division or that undertaking, everything will be transferred to them. So therefore, now the TCS is getting the building of TCS and they are making as a different company. TCS is getting the plant of TCS, which was earlier in Tata Sons, controlled by Tata Sons. Now it is going to be assets or the plant of TCS. So they are not getting anything new. They are getting only what belonged to them primarily, but now it is coming out from that umbrella and is getting separately registered as a company. So they are coming out as in from the umbrella. That is it.
So even though it is coming out of that umbrella, but it is majorly of the Tata Sons itself, right?
Yeah,
So the
that
Tata Sons,
yeah,
yeah, specific block, and
yeah,
then it will be distributed to the specific units, which is getting demerged. So
yeah,
now the computation of the specific depreciation upon that assets which is being received by the resulting company. That's what
yes,
I'm asking.
yes, 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 yes.
Yes. So that is what is confusing me. How you will derive at that value?
The WDV
I
value, the WDV value.
correct. Like how depreciation would be charged because depreciation is as per the whole block which we had categorized before the demerger,
True.
right? Sir? So that's what my question was. That how like
The proportionate part. Huh?
correct. Like
Uh,
how we are going to derive it
that
because it got differed
yes,
from
yes,
that
yes.
specific block, right?
That I got your point.
So,
Yes, yes.
sir, is there any solution?
No, that solution is, there is one particular way, there is a pro rata basis of calculation that we will, in fact, in capital gains, na, you will also get one opportunity. In that particular
Okay.
CG topic, na, in that particular, because CG also have got business restructuring sections, amalgamation,
Yes.
demerger, and
Yes.
all. In that particular thing, we will be doing this particular part. But I just wanted you all to just have your mind in that particular section, only for the reason that when we do CG and when we have to calculate that there will be some comprehensive questions which will involve this sort of WDV. While we are discussing CG, this WDV concept will also come into play. At that point of
Okay.
time, this what I gave you all as an assignment to just think over the inconsistencies, certain things on that. That definitely will help you all in that.
Yes, sir. So that became a very technical one. That's what I was thinking that how it will. So you are saying that in capital gains, so we will be covering it,
Because it
right?
is coming, yeah, WDV that would also be there. This is the big sections of amalgamation, demergers and all. This is
Okay.
a list of provisions that is going to come on that. Business
And the last inconsistency, which I wanted to like ask that, see, sir, you explained the section 39 of the actual cost, where it meant the amount which is actually being spent or incurred. But here
Absolutely.
in special provision, what I understood that actual cost is actually the inherited tax WDV. So, are you getting it, sir? What's the difference? Actually, in 39, it is overriding the 39 section, section
Hmm.
number 39. So, like, ultimately, what to inherit in this? Like, I hope,
Inherited what?
like, sir, it's not an actual cost in actual way, na? Because it's the inherited tax WD which the successor has got.
That's the reason why we about the notional. These are the things, they are defined actual cost. They are
Okay,
defined. So they are not in the in the normal sense, the way we have derived the actual cost. They are not derived. They are precisely defined. So what we discussed was on derived section. We have derived the actual cost. We have derived the WDV. Here, the list that you are reading is defining that if this is the case, then this is a WDV or this is the actual cost. If this is the case, then this has to be considered to be the actual cost. So these list item is nothing but like a notional cost. So this becomes a notional actual cost rather than the actual cost. The way we have
okay.
discussed, the way we have
Oh
learned.
my God. Oh my God, sir, it took me a hell lot of efforts to just identify these inconsistencies, sir. It was not easy. And the final query for PGPP was, sir, we had discussed about the waiver provision, and the second case you had told that it is a tripartite agreement.
Yeah, the loan.
Yeah. So, sir, see, naturally, because SSC is not having the option, so it is getting reduced from the actual cost. Then, what about the waiver amount? Won't it be considered? What would be its tax implications?
No, if you are talking about the waiver, which the tripartite agreement, that example, if you are talking about it,
Yes,
then that will
yes,
get
yes.
reduced from the actual cost. That
Correct.
is it.
So,
And the moment it gets reduced from the actual cost, it will have the impact on your reduced depreciation. Your claim of depreciation also will reduce in the subsequent year. Once your cost will reduce, so will be your subsequent claim of your depreciation.
okay, so that waiver is not. So ultimately, while considering from the reduction, that means the reduced depreciation. Ultimately, income tax department is happy
Happy, yeah, definitely. The
in
income
that
will
way.
increase subsequently, yeah, definitely, yes.
Because in the first case, you were saying that that waiver is separately taxable as income.
Separately, yeah, full waiver amount will be considered as an
Correct.
income.
Because the
In
benefit is received in cash.
true, very true.
So I hope my understanding is
Yeah,
clear, sir.
yeah, perfect it is now. But in the
Okay, sir.
examination, if the question does not specify clearly that it is a tripartite agreement, that
Hmm.
example, you
Hmm.
have to go with the first case only, the waiver of the loan. Loan was
Okay.
taken for the purpose of taking purchase of the asset. That waiver,
Yes.
you will say it is specifically chargeable under section 26 PGBP
Okay. Yes, sir.
because the benefit
Thank you,
is
sir.
in money.
Yes, sir. Got it. Definitely. Thank you, sir.
Perfect. Kanaya, any queries that you have? Students, therefore, now what we will involve, just my humble request to all of you would be this that all the PGBP section students, all the big loaded sections that we have all done, and all the small, like from the employer related sections, we have done entire list, and in that list we have covered in a way, students, many of the items. Then we have also done the related party disallowance, small disallowances also we covered in that process. The cash payments also all those small deductions and the disallowances elsewhere we have covered. Now, only thing, students, I just would want you would be that just go through the same, revise these particular things, and from the next particular class onwards, students, now what we are going to do, we will be doing the capital gains, starting off with the capital gains primarily, and towards the end now, like the way we are having like 45 minutes or maybe half an hour, we will solve one full question. And now, while we are solving one full question, I told you that I am also going to introduce even the CG adjustment in that. So, by virtue of this, we will get a lot of varieties to discuss, deliberate, and we will try to take the things further. So, next session, students, I will be introducing certain practicals onwards, and then one by one, step by step, students, we will move across to all that what is required, and that will give you a cumulative practice. which is very important. Only my humble request would be to just go through the earlier sessions, which you people would have done it. If not, then at least maybe wherever you think that those things, it is better to revise it one more time. So just revise those one more time. Rest of the things, friends, I'll be taking care of through the adjustment route. Don't worry. Like you'll say, so, but small adjustment like that. I remember the interest on that loan which you have taken from the financial institution, and that particular point of time, I remember that you people might fumble on that. So I may put certain adjustment questions and make a draft of questions in which those adjustments will be covered, and we will sort out those particular gray areas that you may be in at this particular point of time. Is that clear to all of you students? Okay, so next session onwards, last half an hour, primary, we will be investing in these kind of a question analysis, primary. And that way, students, one step by step, I'm telling you, you will end up solving some good 10 to 15 varieties of questions that you will be really be exposed to different nuances. Okay. Only thing is that, students, you just try to practice, and while whatever little time that you have, now you, if you want to do practice, practice with the practicals only if you want to do practice. So I'll be devising those questions for all of you, and we shall be dealing with it. Even I'll cover up the ICDS, how ICDS can be covered in this kind of a scenario. Those things also will be covered. Fine, Shruti. So see you then. From the next session onwards, last half an hour would be dedicated for the practical problems. Okay, we'll do a cumulative effect. That is what is the discussion. See you then, students. Next class. Till then, take care. Bye bye. Good night. Ha, okay. Thank you.